The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled Oversight of the Financial Crimes Enforcement Network. I now recognize myself for 5 minutes to give an opening statement. Today we welcome Mr. Himdas, the acting director of the Financial Crimes Enforcement Network, also known as FinCEN, for the first time before our committee. At a time when the international community is united in imposing severe sanctions on Russia for its unprovoked attack on Ukrainian sovereignty and democracy, a strong, well-resourced FinCEN is more important than ever. FinCEN is on the front lines of our financial intelligence efforts, tracking and tracing the ways that bad actors, like Putin and his allies, try to hide their assets. FinCEN also provides law enforcement agencies with information to follow the money and alerts financial institutions to the ways that bad actors might try to evade sanctions. Without FinCEN, terrorists, drug traffickers, and other criminals would pose an even greater threat to our national security and the integrity of our financial sector. Lately, this committee has focused hard on cracking down on oligarchs and other bad actors looking to hide their ill-gotten gains through financial channels. Last month, the committee passed several bills to further cut Russia off from the global markets, to isolate Russian officials on the international stage, to target Russian oligarchs, including the Nowhere to Hide Oligarchs Assets Act, which was led by Chairwoman Waters. Today, I'm pleased that we'll continue discussing these bills and other proposals to target financial crime schemes, including a bill that I've sponsored, the Special Measures to Fight Modern Threats Act, which would help FinCEN target money laundering concerns operating outside of the traditional banking sector. In the past, this committee, and Chairwoman Waters in particular, played an important role in passing the Anti-Money Laundering Act of 2020, which was the most sweeping anti-money laundering reform in decades. AMLA tasks FinCEN with zeroing in on corruption, cybercrime, foreign and domestic terrorist financing, fraud, transnational criminal organization activity, and trafficking. It also contains the Corporate Transparency Act, which requires corporations to disclose their true beneficial owners and tasks FinCEN with implementing this transformative anti-corruption measure. In the 15 months since AMLA became law, FinCEN has made considerable progress on these tasks despite delays in authorized funding. But there's more work ahead to do, more regulations to be finalized to ensure that law enforcement can use these important tools to follow the money and bring bad actors to justice. Even before Russia's illegal invasion of Ukraine, FinCEN helped protect our financial sector from money launderers, authoritarians, and kleptocrats. Today, as some of the richest and most corrupt people in the world look to the United States to stash their dirty money, it's important that Congress and this committee give FinCEN the resources it needs to assure that Putin, his cronies, and his despots and thugs don't get access to our financial system to hide their money. It's also important that FinCEN be transparent with Congress about its accomplishments, its challenges, its strengths, and its weaknesses, and to share findings that can help lawmakers who are tasked with oversight to better understand FinCEN's strengths and weaknesses. FinCEN and Congress must work together to make sure that our financial crime toolkit is being put to good use and that we are staying vigilant against emerging threats and sanction evasion schemes. Finally, I would like to enter into the record statements by the Project on Government Oversight, the Sentry, and the FACT Coalition. These statements emphasize FinCEN's critical role in combating corruption and stress the importance of a fully funded and staffed FinCEN to implement the beneficial ownership reporting requirements as envisioned by Congress. Hearing no objection, so ordered. So, Mr. Das, I look forward to your testimony on the implementation of the Anti-Money Laundering Act of 2020, FinCEN's progress on the beneficial ownership database, and learning more about how Congress can be a strong and reliable partner in helping FinCEN successfully combat financial crime. I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 5 minutes.
Well, thank you, Mr. Himes, and thank you for sitting in the chair. We wish Chairwoman Waters a speedy recovery from COVID, and we're glad that she's getting the care she needs and taking responsibility of separating and quarantining. We wish her a speedy recovery. But I want to thank the chair for holding the hearing. As we know, the proper oversight of agency heads is necessary for Congress's intent to be fulfilled and for agencies to fulfill their responsibilities. For an office like FinCEN, which has operated under the radar screen for the last 3.5 years, appearing before us is especially significant. So Acting Director Das, thank you for being here. Thank you for your outreach. Mr. Das, you were not head of FinCEN during the FY21 NDAA negotiations, which resulted in a rewrite of the statute that you are now implementing. But I'd like to take a moment to share with you congressional intent during those negotiations and the resulting statute and the intent of that statute. And the reason why I want to do this is because reading FinCEN's Beneficial Ownership Notice of Proposed Rulemaking, or NPRM, there seems to be quite a disconnect. Early negotiations were anything but bipartisan. For our part, Republicans' non-negotiables were clear. We wanted to limit burdens on small businesses, protect personally identifiable information as if it were tax information, and hold FinCEN accountable to the American people once a bill became law. We understood on both sides of the aisle that the stakes were too high for millions of small businesses to not get this right. So the four corners in our negotiations came to an agreement that a revised beneficial ownership regime would, number one, be easy to understand for small businesses. Number two, limit the burdens on those filing. And number three, protect civil liberties and ensure confidentiality. What resulted was a targeted statute that would focus on stopping bad actors, such as Chinese and Russian nationals, from using the financial system. At the same time, it limited the burdens of law-abiding small businesses in the process. We directed FinCEN to prevent duplicative and burdensome requirements on small businesses, including rescinding the customer due diligence rule. We directed FinCEN to report on steps it is taking to minimize reporting requirements, which will provide this committee with necessary data on SARs and CTRs and the reporting thresholds. And we ask that the new beneficial ownership data be equipped with the strongest privacy and disclosure protections for small business owners' information. FinCEN is one of the biggest data collectors in the U.S. government. Yet, how they collect, manage, and allow access to that data remains largely a mystery to Congress and, most assuredly, the public. Unfortunately, after reading FinCEN's NPRM, it is clear the agency needs a reminder of what Congress directed. The proposed rule was far too complex, overly broad, and deviated significantly from Congress's intent. My colleagues across the aisle like to advocate for greater authorities for FinCEN. I understand that. But until this office of FinCEN can show Congress it can do the job it currently has, that's not something that we should even discuss, is expanding your authorities. We have a new statute. The rules have not been implemented on that new statute. Let's get that done before we talk about new authorities. And I think that's where we are at this stage. And without objection, I'd like to submit for the record my letter with Ranking Member Lukemeyer outlining our disappointment and concerns with the beneficial ownership in PRM. Thank you. Director Das, it's fair to say that FinCEN has too many responsibilities and doesn't do any of them as well as they could. I'm hopeful for your leadership at FinCEN that we can right some of these huge challenges for the agency and get it right for the American people. And I look forward to working with you to ensure that our anti-money laundering programs are targeted and effective and, at the same time, protect Americans' civil liberties. With that, Mr. Chairman, thank you, and I yield back.
Thank you to the ranking member. I now recognize the gentleman from Kentucky, Mr. Barr, for 1 minute for an opening statement.
I thank the chair for yielding and for holding this hearing today. Congressional oversight of FinCEN is long overdue. Acting Director Das, thank you for coming before us today to talk about the operations of FinCEN. FinCEN indeed has a critical mission, and safeguarding the financial system against illicit use has never been more important. Whether FinCEN is targeting Russian oligarchs, international terrorists, or narcotics traffickers, we need to hold your office accountable for results. At times, this will mean FinCEN investigators need to find a needle in a haystack. Congress supports this work, but FinCEN must also guard against the temptation to add to the haystack endlessly simply so it can collect more and more data on Americans. FinCEN's intelligence should be used as a weapon against money launderers, not as a financial Wikipedia on law-abiding citizens. I look forward to hearing how FinCEN can stay focused on its targeted mission, including its efforts to counter bad actors from Russia. Thank you for your testimony, and I yield back.
The gentleman yields back. I want to welcome today's distinguished witness to the committee, Mr. Him Das, who is the acting director of the Financial Crimes Enforcement Network. Without objection, your written statements will be made part of the record. You will have 5 minutes to summarize your testimony, Mr. Das. You should be able to see a timer that will indicate how much time you have left. I would ask you to be mindful of the timer and quickly wrap up your testimony if you hear the chime. Acting Director Das, you're now recognized for 5 minutes.
Good morning. My name is Him Das, and I am the Acting Director of the Financial Crimes Enforcement Network. Chairman Himes, Ranking Member McHenry, and distinguished members of the committee, thank you for the invitation.
Mr. Das, I'm sorry, you need to bring that mic a little closer. We're having a hard time.
Thank you.
Thank you.
Thank you for the invitation to appear before you today to provide an update on FinCEN's implementation of the Anti-Money Laundering Act of 2020, including the Corporate Transparency Act. FinCEN fulfills a critical statutory mandate as the administrator of the Bank Secrecy Act, or BSA. In that role, we draft regulations to implement the BSA. We receive statutorily required reports from financial institutions about things like suspicious activities and high-value cash transactions, and we regulate financial institutions and enforce the rules. We can and have imposed significant monetary penalties against financial institutions that fail to implement effective and reasonably designed AML-CFT programs. Our statutory authorities give us a powerful toolkit that we use to protect the U.S. national security and safeguard the integrity of our financial system. Along with suspicious activity and cash transaction reports, we can request information from financial institutions and in some cases non-financial trades and businesses within defined parameters through special collection tools. We use the information that financial institutions report to us to support law enforcement to target and disrupt illicit finance threats. And it is a diverse set of threats, from cybercriminals to kleptocrats, organized crime groups, and beyond. Our information and analysis is critical to combating all of them. In fact, in a survey released in 2020, the Government Accountability Office found that law enforcement personnel at 6 law enforcement agencies use BSA reports extensively to inform their investigations, and that BSA reporting helped to identify potential subjects, networks, and defendants. Recent events, from COVID-19 to Russia's invasion of Ukraine and the rise in ransomware attacks on U.S. businesses, have underscored the importance of protecting our financial system. They have made clear the importance of an AML-CFT framework that is well-designed and effective in preventing bad actors from exploiting the financial system, and that protects Americans and American ideals. Clearly, FinCEN has a robust agenda and a diverse mission, and while we work to carry out our statutory mandate, we are also cognizant of our responsibility to do so in a way that safeguards citizens' privacy, that does not put undue burden on small businesses, and that does not spark de-risking that harms financial inclusion. All of these considerations are important to me and to our institution. The Act has helped position us the AML Act has only expanded our responsibilities, and it is nothing short of transformative. We recognize the enormous opportunity that it presents to streamline, modernize, and update the U.S. AML-CFT regime. The Act has helped position us to address today's challenges and provides us with the tools to approach innovations in a way that balances opportunities and risks, and it has placed national security front and center in FinCEN's mandate. While the AML Act has made significant improvements to the AML-CFT framework, these improvements come at a cost. FinCEN employs a team of about 300 dedicated employees, intelligence analysts, investigators, and enforcement officers, policy strategists, data analysts, and others. We welcomed the FY22 appropriations to support our mission. Those resources are critical to supporting our IT systems and the build of our beneficial ownership database. But nonetheless, FinCEN has significant staffing requests that remain unfunded. These include requests specifically related to positions required in the AML Act, such as foreign FIU liaisons, domestic liaisons, and others. Timely and effective implementation of the AML Act is our top priority. Even with our limited resources, the FinCEN team is working diligently with law enforcement and regulatory stakeholders to promulgate rules and take other steps under the Act to promote a transparent financial system. It's important that we get it done right and we get it done quickly. We've accomplished a lot, but we also recognize that we need to do more. As you are aware, we are missing deadlines. And to be blunt, we will likely continue to do so because of our budget situation has required us to make significant trade-offs among competing priorities. Just as I'm grateful for the opportunity to appear before you today, I'm also glad that I have had the opportunity to speak with some of you in the lead up to today's session to hear more about your priorities and what's most important to your constituents. The entire FinCEN team is committed to working with you and to carrying out our ambitious agenda with your support, and I'm happy to answer any questions.
Thank you, Acting Director Das. I now recognize myself for 5 minutes of questions. Mr. Das, I read your testimony and just listened, and I appreciate all of that testimony. What I'd love to have you do in my 5 minutes is maybe fill in some of the blanks, which are really critical oversight blanks from what we've heard so far. That is, how FinCEN defines success in terms of, I would assume it would be prosecutions assisted in, nefarious plots disrupted. How do you quantify and therefore know when you are succeeding and where you may succeed better? I'm used to thinking in the intelligence context where the intelligence community looks at the number of citations for collection and in various reports and that sort of thing. And then second, if we have time, the other thing we obviously need to do is protect the privacy of the American people. And I'm very grateful for the data that you've provided my office with respect to the collection that you do. How do you evaluate and how do you raise incidents of privacy breaches that from an oversight standpoint we should be interested in? But again, I'm primarily interested in how you define success and what metrics allow you and therefore us to track that success.
So thank you for that question, Chairman Himes, and thank you for your support and the committee support as well. Again, we're very focused on measuring and ensuring success in achieving FinCEN's mission. We think it's incredibly important to engage with stakeholders in Congress on ensuring the effectiveness of BSA reporting. And it's absolutely critical to ensuring confidence in the AML-CFT framework. Again, I just want to step back for a second. FinCEN has a number of functions, right? We collect information and reports from financial institutions. We issue regulations that regulate financial institutions to ensure that they have successful and effective and reasonably designed AML-CFT programs as well. And we work closely with law enforcement and the intelligence community and OFAC in ensuring that they receive and use our information in an effective way. We want to be effective on all of these fronts because all three components of our mission work together. In terms of your specific question on the success of reporting, the AML-CFT, the AML Act provides a framework for that. Section 6201 of the AML Act does precisely that. It requires DOJ to provide a report on the value of BSA information, and in January of this year, DOJ delivered such a report. That report states that the value of BSA information for DOJ cannot be overstated. Its staff has searched BSA records over 2 million times over the past 5 years, and it is used in tens of thousands of investigations. The GAO, in a survey conducted from the years 2015 to 2018 as well, indicated that 3/4 of the staff of 6 law enforcement agencies have used BSA reporting in the context of their investigations. And that study also noted that 3/4 of those personnel also indicated that they either did not have an alternative or that alternative to BSA reporting was less efficient. I recognize, however, that the information that I've provided are qualitative measures of success. They're not quantitative measures of success.
Mr. Dawson, since I'm running low on time, so that's interesting information about the DOJ. I think you told me that there's some just shy of 500 law enforcement agencies that have access to the database. When they query that database, are they then required to report what they did with the information that was obtained as part of that query, therefore enabling you to see what the outcome is of the use of that information?
They are not required to respond specifically to the use of the data that they receive when they do a query. However, we proactively engage with law enforcement across the board. We have a number of liaison officers from law enforcement agencies that sit at FinCEN that we engage with regularly in terms of the challenges that they're facing, in terms of using our data, how they use their data, and how we can help them more effectively use their data. We regularly engage with our law enforcement counterparts and provide products to them. We flag...
I'm sorry, let me, thank you. So in my last 20 seconds, the data is important, but so are the anecdotes. We're very focused on Ukraine, Russia right now. In my very limited remaining time, tell us what FinCEN is doing, maybe an anecdote, a story, an example of how you've used this data to go after oligarchs or otherwise illicitly.
Absolutely. We've identified over 2,000 suspicious activity reports that relate to Russian oligarch activity and Russian sanctions invasion. We reviewed all of those reports. We've sent 271 of those reports to law enforcement and to OFAC and the intelligence community to understand what is happening with respect to illicit financial transactions, which they can use for prosecutions, to trace assets, and seize and freeze assets. The information that we receive also, we've provided directly to OFAC so that they can use in their sanctions investigations and then designate and target illicit actors across the board, including Russian oligarch, shell companies, cryptocurrency companies, and others. A number of the recent actions were based on information that we've provided to OFAC as well.
Thank you, Mr. Das. My time has expired. The ranking member is recognized for 5 minutes.
Well, thank you, Mr. Chairman. Thank you, Acting Director Das. I think there's a lot of confusion about what FinCEN does, and I want to piggyback on Mr. Himes' question here. But let's just kind of walk through the basics here. So last month, there were roughly 325,000 suspicious activity reports filed with FinCEN. It's a massive amount of data. So let's talk through how, with this sort of flood of data, what FinCEN does with it. So what percentage of BSA, Bank Secrecy Act reports in FinCEN's monthly database lead to convictions?
So appreciate the question, Ranking Member McHenry. Again, we do not have precise metrics in terms of a one-to-one correlation between information that we receive from financial institutions with respect to suspicious activity reports and direct prosecutions. But, you know, in response to the DOJ report, it's clear that these reports are being used by the Justice Department and by other law enforcement agencies to investigate actions and to prosecute actions as well. We have a law enforcement awards program in place since 2015, and that law enforcement awards program is designed to identify instances in which BSA information has translated into actual prosecutions. So, again, it's anecdotal in nature, but it shows that our information is being used by law enforcement.
But the anecdotes here are very few and far between, and we've talked about this. So I think that's a problem. Mr. Himes' question and my follow-up to basically the same question here is like, show us the results, and we don't have. You're able to talk about what you said was qualitative rather than quantitative. We'd like to see these statistics on what's being done. And so Mr. Himes said 500 individual agencies have access to these databases, the CTR, currency transaction reports, and suspicious activity reports. 500 agencies. So how many individuals have access to these databases?
Thank you for that question. In terms of your first point, in terms of metrics and better understanding how the information is being used, we intend to work with you as well as the law enforcement agencies to hone those metrics and to provide better assessments of how that information is being used. In terms of the number of individuals that have access to the database, from law enforcement, from the intelligence community, and other agencies as well. Again, there are 471 agencies that have access to the information. The number of law enforcement personnel and other personnel that have access fluctuates, but it's in the 13 to 16,000 range.
Okay, of individual users. So then how do you keep track of how those users use that information? How do you police that?
I appreciate the question. We have a robust framework in place. With respect to each of the 471 agencies, we negotiate separate MOUs with each of the agencies after having a discussion with them to ensure that they have appropriate reasons under the purposes of the Bank Secrecy Act to use that information. The MOUs identify protocols for access, protocols for security, and protocols for use of that information.
But how
as
do you
well.
police those MOUs?
So it's part of a sort of an overall suite of efforts in terms of those MOUs. In terms of access to the database, individuals that have access need to go through a robust training program. They need to undergo a background check.
Okay,
each of their
but
searches.
yes, so
I'm
what is the,
Yep.
what is then the proscriptive?
We track each of their searches. They need to enter in a justification. It goes into a query audit log. And then we do two things. One is we conduct an annual audit of the searches that are being done by each of the agencies that have access to ensure that they're being used appropriately and that there's no misuse. We engage with the agencies on an individual basis to ensure that there are no questions and all questions are answered. And then finally, we identify anomalous searches on a quarterly, on a monthly, and on an annual basis to identify whether or not there are any misappropriate uses of the database, and we reach out to the agencies to try to remedy that as well.
Okay, I want to be respectful of everyone's time, but what if an MOU is breached, or individuals have breached that responsibility? What's the enforcement action?
We will we will do two things. One is, first of all, we'll engage with the agency and seek responses to an investigation in terms of what that individual is doing and whether or not they're doing it appropriately, and we'll refer the issue to the IG's office as well.
Okay, would you provide data on those referrals?
Yes, sir, we will.
Thank you. Thank you. Thanks for your testimony.
Gentleman's time has expired. The gentlewoman from New York, Ms. Velasquez, who's also the chair of the House Committee on Small Business, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Director Das, in December of 2019, FinCEN released a statement entitled Bank Secrecy Act Reports filed by financial institutions protect elders from fraud and theft of their assets. In this statement, former FinCEN Director Ken Blanco acknowledged that understanding the trends and potential exploitation methods included in these reports can help banks and consumers protect themselves. Can you briefly tell us how financial institutions and elder consumers use these reports to protect themselves from financial exploitation?
Thank you, Congressman Velasquez. Elder abuse is a terrible problem, and one that we and our partners from across the government have been focused on for many years. And we provide ongoing support to numerous task forces and multi-agency groups working to address this problem. In February, we joined with other federal agencies in an awareness-raising campaign about romance scams, which often target the elderly. In this campaign, we highlighted our rapid response program. In this program, FinCEN partners with law enforcement agencies that receive complaints of abuse and cooperates with foreign financial intelligence units, our counterpart agencies in foreign governments, to help recover stolen funds. We've done a lot more on this front too. Our first public advisory to financial institutions on elder financial exploitation dates back to 2011. Since then, in 2017, we issued a joint memorandum with the CFPB on financial institution and law enforcement efforts to combat elder financial exploitation. In 2019, we issued a financial trend analysis describing how our elders face increased financial threat from domestic and foreign actors, and it's critical that we work with law enforcement, regulatory, and national security partners to use our information. Public documents like the one I just mentioned that highlight typologies educate financial institutions so that they can appropriately use risk-based mitigating measures and monitor to detect potential elder abuse. This ultimately protects consumers. And this reports also led to an incredible increase in SAR reporting and has ultimately led to numerous successful prosecutions of bad actors.
Thank you for that response. Director Das, like elders, survivors of intimate partner violence are at high risk of financial exploitation. In fact, 58% of survivors, approximately 19.1 million individuals in the United States, report that a harm doer has accessed, withdrawn from, or otherwise controlled their bank account. This means that over half of survivors in the U.S. do not have access to a safe and protected bank account. Wouldn't you agree this is a significant problem that must be addressed?
So thank you for that question. I agree that victims of domestic violence and all victims of financial abuse should be able to obtain banking access and extricate their accounts from their abuser. We're very focused on financial inclusion, and we want to work with you and your offices to ensure that FinCEN does its part to ensure that survivors have access to the banking services.
Thank you. So one of the bills that we are reviewing here today is a discussion draft of legislation I am working on, the Survivors Safety Banking Act, which will require FinCEN to compile and publish reports on statistics and trends of customer and potential customers of covered financial institutions who are a survivor of domestic violence or economic abuse. Wouldn't you agree that similar reports will likewise help protect consumers who are survivors of intimate partner violence from financial exploitation?
Thank you, Congressman. Without commenting on the specifics of the draft legislation, FinCEN has and will continue to urge financial institutions to report all forms of suspicious transactions and to be attentive to any abnormal patterns or behaviors, whether in their customers' accounts or in their interactions with them. Again, as you're well aware, and as FinCEN has highlighted through advisories and notices and alerts, there are a myriad of illicit finance threats facing consumers today, and sadly, vulnerable populations such as the elderly or those in abusive relationships can be victimized and financially exploited by those close to them. We will continue to educate and equip financial institutions on these threats, what to look for, and how to report suspicious transactions.
Well, I'm looking forward to working with your office.
Thank you,
on
as
this
am I.
matter. Thank you. I yield back.
Gentlelady's time has expired. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Dawes, can you please describe your strategic plan for protecting the privacy of the individuals and firms you collect data from?
Pardon, Mr. Congress. Oh, there you are. Pardon, Congressman, if you could repeat your question, it didn't quite come through clearly. My apologies.
Okay. That's fine. Could you please describe your strategic plan for protecting the privacy of the individuals and firms you collect data from?
Yes, thank you, Congressman. Again, that's a very important issue for us. Again, the privacy of our database and the sensitive information that we collect is fundamental to me, and is fundamental to our institution more generally. We have a number of processes in place to ensure that the information is safeguarded and used appropriately, and we're continuing to work to do more on this front to identify any gaps or issues and to remedy those gaps. We have a robust framework in place, both from an IT perspective and from a procedural perspective, in ensuring and safeguarding the use of this information. From a IT perspective, we have robust controls and significant segmented IT architecture, which is a robust and constrains access to the database by hackers and other malicious threat to the database. Second of all, we conduct regular penetration testing to ensure that the database is not exposed to malicious threats as well. And we subject the database to the highest standards of security controls. It's called the FISMA high level with respect to the security structure of the IT database. With respect to the privacy considerations, again, as I mentioned previously, we have robust controls in terms of access to the data and the use of the data. We negotiate MOUs in place with each of the agencies that have access to our database. Those MOUs include provisions that ensure that the database is used appropriately and that there are appropriate audit and oversight functions. We provide regular training to those who have access to the database to ensure that they understand what the parameters are in terms of their use of the database and that they use it appropriately and for purposes that are consistent with their agency's access to the database and consistent with the purposes of the Bank Secrecy Act as well. And then we audit those uses. Again, we have a query audit log where we track each of the searches and the justifications made for those searches. Where there are anomalous searches, we refer those searches and concerns to the home agency as well as to the IG's office. We investigate, and if there are shortcomings in terms of those searches, we work with the agencies to either restrict access or to terminate those individuals.
Have there ever been any breaches?
So there have been no IT breaches that we're aware of to the overall database.
Does FinCEN share its information and data with the Internal Revenue Service?
So one of the purposes of the Bank Secrecy Act in terms of use of the information is to combat tax evasion, and the IRS has access to our database to support their law enforcement efforts and efforts to combat tax evasion. The IRS Criminal Investigations Unit as well is a partner in our efforts to enforce.
I think that's a yes.
Pardon?
Reclaiming my time. I think that's just a yes, isn't it?
It is a yes.
Can you explain how the cost-benefit analysis in your rulemaking and how that compares with other agencies?
Yes, sir. We conduct cost benefits under the Regulatory Impact Act, an analysis for each of our rulemakings that's required by law. And when we renew regulations, as we're required to do on a periodic basis, we conduct cost estimates in terms of what the costs might be with respect to those regulation renewals.
Thank you very much. Mr. Chairman, my time is about to expire, and I yield back. Thank you.
Gentleman yields. The gentleman from Missouri, Mr. Cleaver, who is also the chair of the Subcommittee on Housing, Community Development, and Insurance, is now recognized for 5 minutes. Mr. Cleaver, I think you need to unmute.
Yeah, thank you. I apologize. Thank you very much. I have a number of questions that I would like to raise with you, Acting Director. You know, you compared to many or probably most of the federal agencies, you are small, either an agency or bureau. I'm not sure which is the appropriate term, but I'm wondering. Congress approved 161 million, and the president had requested 191 million. Does the fact that we didn't meet the president's request have any negative impact on your work?
Thank you for that question, Congressman. We are a bureau of the Treasury Department. We have 300 FTEs at this point. You know, first of all, I want to express appreciation for the funding in the FY22 appropriations. We received about $34 million over previously enacted levels in that legislation. And that funding is incredibly important to us in terms of being able to ensure operations of our IT system and our IT database. It's also incredibly important in terms of our design and build of the beneficial ownership database. So it is a valuable contribution in terms of our overall effort. It does fall short, however, in terms of our ask of, I believe, $64.5 million over previously enacted levels. The amount of money that we did not get was intended to be used for FTE staffing for all of our efforts to implement the AML Act. We had asked for 80 FTEs to support our staffing and implementation of the AML Act. That includes drafting regulations and the rules, being able to conduct the cost-benefit analyses, and to perform all of the other functions under the AML Act, including hiring foreign FIU liaisons, domestic liaisons to do outreach to financial institutions across the country to help them understand how we use data and how it is effective. It would be used to hire innovation officers, security and information officers as well, that would be able to help steer and lead the charge with respect to our engagement on innovative technologies and how the regulatory framework meets the innovative technologies as well. Again, you know, even with the resources that we have and that we're using, we're working full tilt to be able to work through and effectively and efficiently complete all of the mandates required under the AML Act, but we need more.
Yeah, you just hit on the point that I was going to raise, which is what is not getting done because you didn't receive the amount that was requested in the president's budget. And I'm assuming you're saying that everything is getting done. It's just not at the level that the Bureau required.
So 2 points on that. One is that we're missing deadlines, as I mentioned in my testimony, and we'll continue to miss deadlines because we just don't have the staffing to be able to carry through on all of the efforts required under the AML Act. The second is we're making trade-offs. We're making trade-offs against resources that could be used to engage in enforcement and compliance work, that could be used to ensure implementation of our whistleblower program, that can be used to track ransomware actors and to be able to support law enforcement and to perform all of the other activities that we're doing and required to do under the BSA.
Well, yeah, I'm paranoid about the whole cryptocurrency issue, and I think I'm going to remain paranoid for some time. And so, in November of 21, FinCEN advisory on ransomware and the use of the financial system to facilitate ransom payment notes. Cyber criminals usually require ransom payments to be denominated in convertible virtual currency, most commonly in Bitcoin. However, they are also increasingly requiring or incentivizing victims to pay in an anonymity enhanced cryptocurrency. Now, what is the incentive for malicious actors to demand payment in an anonymity enhanced cryptocurrency? I'm presuming they believe they are maximizing their chances for getting away, for escaping.
That's correct, Congressman. I think that anonymity enhancing currencies is another way in which ransomware actors and other criminal actors are working to avoid the financial system and evade the financial system and to hide illicit transactions. Again, we're very focused on ransomware. We've taken a number of enforcement actions with respect to cryptocurrency exchanges that support ransomware actors, and we're doing our best on this front.
Gentleman's time is expired.
Thank you very much.
Gentleman's time has expired. The gentleman from Missouri, Mr. Lukemire, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and welcome, Acting Director Das. You and I had multiple conversations over the last few weeks here about independent ATM operators, and today I'd like to put a few facts on record and discuss this issue with you again. The fact is, for years, the members of the FIEC and FinCEN supported the notion that independently owned ATMs are at high risk for money laundering. This was evident in the FFIEC BSA/AML examination manual, which contained many disparaging remarks about the industry and the so-called risk they pose to money laundering. Because the members of the FFIEC took this stance, financial institutions for the last several years have been refusing to provide financial services to independent ATM operators. However, because of the extensive conversations I've had with you and members of the FFIEC, it has been determined and acknowledged that independently owned ATMs do not, in fact, pose a high risk of money laundering. This became apparent when, after multiple bipartisan meetings with members of Congress, the FFIEC changed its examination manual to accurately portray that independent ATMs are not inherently at risk for money laundering. In addition, I directly asked representatives of the FFIEC whether independent ATMs are a high-risk industry, and each of them individually said no. Despite the changes made to the examination manual, I still hear reports of financial institutions cutting off access to services for independent ATM owners. That's because the regulators and examiners for years have intimidated financial institutions into eliminating services to a legally operating industry. The perception is still there, similar to a choke point activity. It's now up to you and them to fix it, Dr. Doss. That's why I'm calling on all the prudential regulators and FinCEN to issue a policy statement to all financial institutions clarifying that independently owned ATMs are not a high-risk industry for money laundering. One excuse has been that we would be setting a precedent. This is not a precedent. In 2020, the agencies and FinCEN issued a fact sheet to all FDIC-insured institutions about nonprofit organizations. Specifically, this fact sheet stated, and I quote, "NPOs do not present a uniform or acceptably high money laundering terrorist financing risk," unquote. Mr. Chairman, I would like to enter for the record that document dated November 19, 2020, with ask unanimous consent. Thank you. So the reason to bring this all up today is I want to get these, these facts on the record of what has actually been going on with some of these agencies. They made up the charge that the money laundering was going on. They got caught, and now they need to fix it. And so part of that fix is to fix the manual, which they've already done and are working on with the industry itself, and I applaud those efforts. The second part of it, though, is to clear up the perception that is still there with the financial institutions that this is a high-risk industry and that they can, these banks, if they want to go back and finance them, can do this again without punitive action taken by the regulators if they do it in a prudent, risk-free manner. So my question to you is very simple. Will you join the other agencies and send a statement clarifying that independent ATM operators do not have a high risk of money laundering?
So thank you for that question, Congressman Lukemeyer, and I appreciate the conversations that we've had over the past weeks on this issue. Again, we agree that this is an ongoing issue in terms of clarifying the scope of this issue for examiners and for financial institutions as well. We are working with the banking agencies and the FIPIC agencies to clarify this issue and to issue a joint statement, and we would join any such joint statement with the federal banking agencies.
I thank you for that. I take that as a yes. In the future, I would just make this comment that your agency should be a check on these other agencies to make sure this doesn't happen again. You should be pushing back on them when they do things like this where there is no evidence that there's money laundering going on. Would you continue to be a watchdog on that?
We will continue to engage with the banking agencies and to ensure that the record is clear on this point in terms of no particular customer type, including independent ATMs, do not present an automatically higher risk with respect to money laundering, correct?
Well, thank you very much for that. My time is about up here. I've got some more issues to discuss. Your expansion of some of the definitions with regards to benefit ownership rules and regulations, but we're out of time. With that, I will yield back the balance of my time, Mr. Chairman. Thank you.
Gentleman yields. The gentleman from New York, Mr. Meeks, who is also the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning. And as indicated, I'm the chair of the House Foreign Affairs Committee, but I'm also a member of this committee. And one of the issues that pop up now on both of our committees is dealing with Russia. You know, Russia's illegal and immoral invasion of Ukraine. All of us have come together on both committees to impose significant sanctions on Russia and Russian oligarchs. But we are, as always, when it comes to sanctions, We're worried about how these sanctions can be circumvented. And sanctions have traditionally been skirted through shell companies in real estate, for example. And in FinCEN's March guidance, it's noted that the United States needs to also look out for the Central Bank of Russian Federation using import or export companies to engage in foreign exchange transactions on its behalf. So can you explain how FinCEN is monitoring these specific types of traditional means of sanction evasions? And what are some of the persisting issues that FinCEN is seeing with these techniques, not only as it relates to Russia, but also other sanctioned countries?
So thank you, Congressman. You know, our team, again, has been working incredibly hard on Russia since the Russian invasion of Ukraine, both to support sanctions efforts as well as law enforcement efforts. We've worked incredibly hard to raise awareness on the part of financial institutions, that is banks, cryptocurrency exchanges, other financial institutions as well, about Russia's abuse of the financial system and their efforts to evade sanctions. We've issued 2 alerts so far, one on sanctions evasion specifically, and one on the efforts of Russian oligarchs to evade sanctions more generally and to hide their illicit assets so that we can ensure that financial institutions understand the ways in which Russian actors might abuse the financial system. We also recently issued a advisory on kleptocracy as well. Those advisories and alerts alert financial institutions in terms of the red flags of either sanctions evasion or typologies with which Russian actors, oligarchs, proxies, elites seek to evade sanctions. This allows financial institutions to better understand what types of transactions bad actors might engage in to evade sanctions. We've also reached out to financial institutions and to law enforcement across the board. This includes the FBI, HSI, Commerce's Bureau of Industry and Security with respect to export controls and others to participate in FinCEN exchanges with financial institutions so we can exchange information with financial institutions and law enforcement so that we can understand how to better trace, identify Russian sanctions evasions efforts so we can get quality suspicious activity reporting from financial institutions that is actionable and that we can provide back to law enforcement as well. We are very active in terms of reviewing these suspicious activity reports that we get, and we take those suspicious activity reports, we distill those reports into summaries for law enforcement to be able to use, for OFAC to be able to use in their sanctions designations efforts and their targeting efforts as well. So we have a number of different fronts in terms of both working with financial institutions to collect more information in terms of trends or typologies of sanctions evasion, and then to take that information and translate it for OFAC and law enforcement to be able to use that information to go after Russian oligarch assets and to be able to identify other bad actors for sanctions designations as well.
So thank you for that. And we could go deeper, but I want another question because you mentioned crypto. And I heard also conversations from Congressman Cleaver, we all have, certain concerns about crypto. I'm trying to find that balancing act because I see that there's some good purposes of it. And some people that try to utilize and get around. There's been concerns about Russia trying to use crypto to evade sanctions also, specifically. So my question, the little time that I have is FinCEN thinking about new ways to implement AML, know your customer procedures in this evolving world in a way that strikes a balance? I want to know what striking a balance. And can you explain what FinCEN is already seeing with respect to crypto being used to evade sanctions? In 2 seconds.
So I appreciate the question. We issued, as part of one of the alerts that we issued at the outset of the Russian invasion of Ukraine, the alert on sanctions evasion specifically highlighted the risks of cryptocurrency being used to evade sanctions. Again, we've not seen large-scale evasion through the use of cryptocurrency, but we're mindful of that, and we're working with financial institutions so that they're aware of that potential, that we can identify large-scale evasion using cryptocurrency and act on it as well. So thank you.
Gentleman's time has expired. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thanks for holding the hearing. Mr. Das, again, thank you for appearing here. And let me pick up right where Chairman Meeks left off on these advisories and alerts on Russia sanctions evasion efforts. I appreciate that FinCEN is issuing these advisories and alerts for law enforcement, for financial institutions. I appreciate the communications between your agency and law enforcement. But Acting Director Das, can you go into a bit more detail about the data analytics that your agency engages in providing that to OFAC? And can you give us a little bit greater granular detail about the analysis that FinCEN provides to OFAC to give OFAC the tools to thwart these sanctions evasion efforts?
So I appreciate that. So we do a number of different things on the analysis of information that we get with respect to Russia sanctions. First of all, we receive suspicious activity reports. We review those reports. We've reviewed over 2,000 Russia-related SARs, and we've referred 271 of them for further action to OFAC and to law enforcement as well. We've sent these reports to the FBI, to Department of Commerce's Bureau of Industry and Security as well.
Do you know whether or not OFAC has then acted upon those 271 SARs that you've flagged for them?
So we've provided OFAC with a substantial amount of information, either directly or through the Office of Intelligence and Analysis at the Treasury Department. We are aware that they review that information very carefully, and they've acted on that information in the context of their designation.
Do they report back to you, hey, this has been helpful, we've now closed a sanctions evasion loophole or effort?
So we remain in close communication with OFAC. We're part of a working team in terms of ensuring that OFAC has the information that we're seeing and that we can engage with OFAC in terms of the sanctions designation and how they're using it. In terms of the short answer to your question is yes. They do use our information. It has been used in sanctions designations, both in the context of Russia and in many other contexts as well.
Okay, great. Keep up the good work there. FinCEN is asking Congress to authorize a sixth special measure, which would allow you to block fund transfers on a transaction-by-transaction basis, including for digital assets. However, special measures 1 through 4 appear to be rarely used, and FinCEN has often rescinded proposals to impose the fifth special measure against foreign financial institutions. Less than 2 years ago, you voluntarily withdrew a fifth special measure designation against Banco Delta Asia, which had been tied to North Korean money laundering. Why should Congress grant FinCEN a new sixth special measure to go after digital assets when the effectiveness of the first 5 special measures is unclear?
So thank you for that question. Again, we're very focused on the use of our Section 311 authority, as well as the authority in Section 9714 of the NDAA from 2021, which includes a special measure 6. Section 311 was enacted in a time when most financial relationships and transactions were done through the traditional banking system, where there are traditional correspondent account relationships. Nowadays, cross-border transactions often include money services businesses, payment systems as well, foreign exchange houses, as well as cryptocurrency. So if we were to use the Section 311 authority against, for example, Chinese ransomware actors, those using dark markets and the like, we would not be able to use the Section 311 authority with respect to those transactions to prohibit those actors from abusing and engaging in money laundering with respect to the U.S. financial system. So currently, the Section 311 authority is not right-sized for the types of threats that we're seeing through the use of cryptocurrency.
One final question. I do want to echo the concerns of the ranking member on FinCEN's development of its beneficial ownership database, and I want to highlight the leak of the SARs by a FinCEN employee. You talked about no hacking. There's been no hack, but there was this very troubling report of a FinCEN employee in 2017, 2018, as well as ProPublica's recent disclosure of details from a leaked IRS documents. Data security looks to be not just a FinCEN problem, but a Treasury problem. What specific steps have you taken to ensure that these illegal disclosures never happen again?
So, when that disclosure happened, we referred the matter both to our Inspector General's office as well as to law enforcement. That individual was removed from the premises, detained, prosecuted, and served time. We're very focused on that. We took a number of steps to ensure that the mechanism used by that individual, in terms of being able to use a what is it called? A thumb drive. Thank you. My brain
Yeah,
freeze there.
the gentleman's time has expired.
Sorry. Very quickly, to use a thumb drive, we've seized that use except under limited circumstances. And again, we have a robust internal security program to ensure that the database is used properly.
Thank you.
Thank you.
Gentleman's time has expired. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Mr. Chair. And if my Wi-Fi goes out, just move on to the next participant here. I'd like to first thank Director Doss for his service to our country at a very difficult time when sanctions have been imposed in many different ways against Russia. And obviously, the role of FinCEN has really grown by leaps and bounds as we deal with them. The ranking member talked about you have massive amounts of information coming to you. And, compared to what the normal person has, I'd say that's true. But as compared to the big tech companies and other major institutions, you get a fraction of the information that they vacuum up every day. So I just want to let the record reflect as that massive amounts of information has to be compared to what. And but I do want to talk about several of us visited the Caribbean recently, and one of the things that came up again and again was money laundering issues, de-risking issues, and what appeared to be kind of a redlining of that entire region, which has left the correspondent banking services to the Caribbean in really pretty sad shape. With the exception of Wells Fargo, it appears that correspondent banking has pretty much left the Caribbean. And so I'd like you to talk about, is FinCEN, is our ability to do the money laundering and know your customer, can we do that on a nation by nation basis, or do you guys look at regions, or how does that work?
So, Congressman Perlmutter, thank you for that question and for the opportunity to discuss this topic. Again, financial inclusion and de-risking is incredibly important to FinCEN and to Treasury writ large. It is critical that countries, jurisdictions, and customers have access to financial services. De-risking is a real problem, and we're aware that it has impacted a variety of customers and sectors. There's been a lot of work that we've done to understand the root causes of de-risking, to identify what more that we can do on this front. And in fact, the AML Act under Section 6215 requires that we identify and develop a strategy to be able to respond to de-risking, and we've contributed to the GAO report on de-risking as well. That was also required by Section 6215. Again, it's clear that the root causes for de-risking are complex and that they really come down to the cost-benefit considerations and calculations that financial institutions are making when they decide who to do business with. Some of these considerations are commercial and focus on business strategy and profitability. It's also very important just to note that there are considerations that are related to jurisdictions' implementation of their AML-CFT rules and ensuring that they have robust AML-CFT frameworks within jurisdictions. We at FinCEN and at Treasury engage on a regional basis and on a country basis to ensure that countries are implementing high and robust AML-CFT standards as well, and to be able to encourage them to do so. We work through a number of different institutions as well, including FATF, to raise standards and to ensure that countries are able to implement those standards. And in that will provide confidence to financial institutions that that they can continue to bank customers within specific
All right,
countries.
well,
and
let me
jurisdictions.
stop you for a second.
Yep.
Let me stop you for a second, because it appeared to us that there really wasn't a case-by-case or country-by-country kind of review of this, and not in a very frequent fashion, that there was just sort of this carte blanche against this region, and really has affected individuals and companies and businesses down there because they can't get correspondent banking, and it's made it very difficult. So, I mean, how, and I appreciate the general approach you take, but let's say with this respect to this region, are you guys updating on a pretty continuous basis whether you think you need more de-risking or everything's okay?
So, Congressman, thanks for that question. With respect to specific details about how Treasury is engaging, particularly in the Caribbean region, I'm happy to follow up on that and provide you specific answers to your questions.
Okay. No, thank you for your time and thank you for your service.
Gentleman's time has expired. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you for being here today. When the Bank Secrecy Act was updated in the 2020 NDAA, the small business community expressed serious concerns about burdensome new regulations that would accompany this law. And Congress intended to strike this balance between tracking down bad actors within the financial system without hurting small businesses by directing your agency to only collect 4 simple pieces of information. However, in the proposed rule, FinCEN is requiring businesses to report more information than is required by statute. So, Acting Director, can you explain this decision and also shed some light on your communications with financial institutions as you have been developing these new regulations?
So thank you very much for that question, Congressman Williams. We are very mindful of the impact that the AML-CFT framework and the rules that we have to implement have on small businesses and the business community more generally. In the context of the beneficial ownership rule, again, we are required to develop a beneficial ownership framework that is highly useful to law enforcement, while at the same time minimizing the costs and burdens to small businesses. And we're very mindful of the fact we received a number of comments in that process, in the rulemaking process, about the burdens that small businesses will face. We're taking into consideration very seriously those comments in the context of working towards a final rule as well.
Yeah, that's important because small business is the heart of our economy, and they are getting buried right now. Everybody says, I'm for small businesses, but they add more regulations to what they need to do. So thank you for looking at that. And to keep on the topic of small businesses, the proposed rule estimates that there will be over 2.5 million new covered entities under this rule. So for many of these businesses, this will be the first time that they have ever heard of FinCEN. And additionally, many will be wary of turning over their information to a new government agency, like most of us are. So, Acting Director, again, how will you build trust within the small business community as well as educate them on what will now be required of them?
So thank you for that question. As we work through the rulemaking process with respect to all of the various the 3 different rules that we have to issue in the context of the Corporate Transparency Act, we are planning a outreach process to reach out to industry groups, to financial institutions, to state-level secretaries of state and others, to be able to ensure that the business community, stakeholders, and individuals across America understand what the rules do, what they require of small businesses and others within in terms of reporting, and we plan on proactively engaging. This requires a extensive strategic plan. And again, when it comes back to resources, this is part of the reason that we're asking for additional resources to be able to support our FTE hiring, so that we have the people that are available to develop an outreach strategy, to implement that outreach strategy and to engage with a high number of industry groups, again, states and secretaries of states, businesses, and to do the type of stakeholder outreach that we need to do to ensure that everybody understands the scope of the rules, what they're required to do, and how that information is going to be used.
Small businesses are scared to death of new government agencies. And when you start talking about hiring more, that really worries small business. I'm a small business owner, and I hear what you're saying, but it's worrisome. So we have heard about the massive inflow of CEDARs and SARs coming into the agency. One solution that many of my Republican colleagues and I have advocated is to raise the monetary thresholds to file these reports. As a reference point, when this law was first adopted in the 1970s, a brand new Corvette, I'm in the car business, so I measure this. A brand new Corvette sticker price was $5,000. Today, the same model car costs over $100,000. And even with this huge increase in prices, the thresholds to file these reports has stayed the same. So I do not see how you can effectively recognize bad actors when they are being obscured among the hundreds of thousands of other reports that are filed. So another question. How do you think we can make the reporting regime more effective so FinCEN is receiving fewer overall reports from the financial institutions?
Thank you for that question. Again, Section 6204 and Section 6205 of the AML Act require us to review the reporting thresholds for CTRs, currency transaction reports, as well as suspicious activity reports. That's something that we're currently undertaking. We're engaging with a number of other agencies at the state and federal level in terms of understanding the use of the report, and a number of proposals in terms of both raising the thresholds as well as considering lower thresholds in terms of developing what is most useful for law enforcement. So that's an undergoing review that we are working on. We also intend to sort of link up that review with our review of information coming in through Section 62.
Gentleman's time has expired.
Yield my time. Thank you.
Gentleman's time has expired. The gentleman from Illinois, Mr. Foster, who is also the chair of the Task Force on Artificial Intelligence, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Acting Director Das, for your service in a very challenging time. And I also ought to say, as a former and successful small businessman myself, I share my Republican colleagues' enthusiasm for the role of small business, and I hope that we can both applaud on a bipartisan basis the record number of startups that are happening under Joe Biden's economic recovery. Now, I understand that FinCEN has had a notable success in combating some classes of illicit cryptocurrency cases through either blockchain analysis or through other more traditional detection methods. I presume that you've also been mostly successful in preventing illicit crypto use in transactions involving exchange accounts or hosted wallets that comply with KYC AML anti-laundering standards. However, I worry that we are much less equipped to handle instances where transactions involve self-hosted wallets or generally off exchanges. Now, in a hearing a few months ago in this committee, when we had several of the crypto industry leaders, they acknowledged that if we wish to prevent crypto from being used for ransomware and other illicit payments, that there is no alternative to having all crypto transactions pseudonymously attached to a legally traceable secure digital identity from a country that we have extradition treaties with. And this is something that they acknowledged was sort of a logical necessity here. Now, in late 2020, FinCEN proposed a rule that would amend the implementation of the Bank Secrecy Act regulations and require banks to provide KYC information and digital asset transaction records for unhosted or self-hosted digital wallets. Now, however, if we end up with a regulatory regime where bank accounts are not needed to create or access a digital wallet, what might the regime that works to prevent money laundering, ransomware, and so on, how would you monitor something like KYC compliance if it's not tied to a bank account?
So thank you for that question, Congressman Foster. So in terms of the rule, first of all, the NPRM that was issued in 2020, a number of comments were made. I think we received over 8,000 comments to the MPRM. We're reviewing those comments and considering next steps in terms of the overall approach. With respect to the risks presented by unhosted wallets, again, it is not that unhosted wallets are entirely opaque. Unhosted wallets often engage in transactions with cryptocurrency exchanges, which are subject to AML/CFT regulation, and those are subject to SAR reporting requirements as well. So law enforcement can engage with cryptocurrency exchanges with respect to suspicious activity reporting and other reports that might be applicable to them in terms of getting some degree of understanding in terms of transactions with unhosted wallets as well.
Yeah, but there are limits to that, which we probably shouldn't talk about here. But there are limits to your ability when you start to use privacy-enhanced coins, when you go through multiple devices designed to obscure the origin of transactions.
And that's something that we're very concerned about. Again, the illicit finance risks of transactions that are not transparent create significant illicit finance risks. And that's something that we're very focused on in the context of understanding more effectively the cryptocurrency industry and how cryptocurrency is used, is to be able to better assess what those channels of illicit finance risk are, and to be able to find ways to identify an appropriate regulatory regime so that appropriate AML/CFT controls are in place. But again, this is a question that we're very focused on with respect to unhosted wallets as well as other types of convertible virtual currencies. Yep.
Well, I think ultimately it seems like what you're going to need is some sort of a internationally operable crypto driver's license that you attach to every crypto transaction that you can use. When you see a crime has been committed, for example, you can go to a trusted court system and get that de-anonymized and find out, when your screen locks up with ransomware, you have to be able to go to a judge and say, here's the proof a crime has been committed, and I want to know who owns that wallet, and then have the judge in a trusted jurisdiction. It's an important part, and that seems to only work if you have something like a crypto license attached pseudonymously to every transaction. I don't see a logical alternative to that. And if you're aware of one, I'd be very interested as you interpret all these comments coming in.
I appreciate that, and that's something we can follow up with you on.
Thank you.
Gentleman's time has expired. The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Mr. Chairman. Good morning, Acting Director Das. As I know you are aware, and I do appreciate your meeting with me and my staff, the pandemic caused a horrific spike in the amount of child sexual abuse material, or CSAM, found online. In 2021 alone, the National Center for Missing and Exploited Children received nearly 30 million reports of online child sexual exploitation. That is a staggering 70% increase in this illegal, illicit exploitation from 2019, a 70% increase. The financial sector plays a vital role in combating the distribution and sale of these disturbing images and videos of children being sexually abused. But clearly, much more needs to be done. Title 31 of the U.S. Code requires the financial sector to implement effective anti-money laundering compliance controls. Combating human trafficking, including crimes against children, is one of FinCEN's anti-money laundering priorities. I would like to submit to the record, Mr. Chairman, two reports compiled by separate anti-trafficking organizations using different investigatory methods, and both found extremely troubling results on a website that also grew massively during the pandemic, and that is known as onlyfans.com.
Without objection, so ordered.
I thank the chair. Major U.S. credit card companies, which must comply with Title 31 regulations currently allow their products to be used to purchase content on this website. Although there is no legal issue with purchasing content involving consenting adults, this report by the Avery Center found, and I quote, a clear correlation between third-party traffickers and minor victims on OnlyFans. And the platform has, quote, no screening procedures to identify situations where exploitation or abuse are occurring. The other report by the Anti-Human Trafficking Intelligence Initiative and the University of New Haven found, again, and I quote, a high volume of OnlyFans profiles possessing commonly understood indicators of CSAM. Again, CSAM is child sexual abuse material and sex trafficking within less than 2 hours. These reports assert that the U.S. financial sector is enabling this illegal commerce by, quote, failing to adequately comply with their existing regulatory requirements mandated by Title 31. Acting Director Das, what are the regulatory requirements that credit card companies must comply with in order to prevent the use of their products to purchase CSAM and non-consensual sexual imagery?
Thank you for that question, Congressman Wagner. Again, credit card companies are subject to defined AML-CFT program requirements under our rules, where they need to focus on whether or not their partner financial institutions are engaged in money laundering or terrorism financing. However, in the overall framework, credit card companies act as intermediaries in the overall financial system in terms of payments between merchants and financial institutions. The financial institutions at the end that deal with customers who might be malign actors are required to file suspicious activity reports when they see information that they indicate may cause or that they may suspect is linked to illicit finance activity. And so the financial institutions do file suspicious activity reports in relation to online child sex
I'm so sorry, Director.
exploitation.
Director,
Yes.
I know I'm about ready to run out of time, and I just want to thank you and your office for working with me. And I would implore my colleagues on the committee to also get on board and work with our office in this regard. More has got to be done to ensure that this child sexual abuse material cannot be purchased using mainstream financial tools like a credit or debit card. So I'm imploring my colleagues and FinCEN to work with me as we find a solution to keep our children safe. 70% increase during the pandemic. This is unacceptable. I thank you, Director Das, for your support on this, and I appreciate the chair giving me the indulgence of time, and I yield back.
The gentlelady's time has expired. The gentlewoman from Ohio, Mrs. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you also, Acting Director Das, for being here today. I have a two-part question, but first, for the record and for the sake of time, I won't repeat Congressman Perlmutter's question, but I too was on that same codel with him. And I also want to associate myself with the words of Congressman Foster. With that said, Mr. Acting Director, what we heard, and I'll say it a little differently, as Mr. Perlmutter referenced being red line. We heard this repeatedly from heads of states to the point that they felt they were being punished by United States of secretaries of states and how our process works, as it looked to blaming them for money laundering or blaming them for crimes that they didn't believe were necessarily the case. While we all understand it's a delicate balance, but I guess I too share a concern that these are people of color, and they were a lot stronger than the redlining. They thought part of it dealt with systemic racism. And I made a commitment, like the others on the CODEL, that we would come back and really take a look at this. So I'd like to join you in that dialogue when you have it with Mr. Perlmutter. But let me also say, like most of us, or all of us rather, I represent people who are amongst the 9 million Americans who live abroad. And one of those constituents by the name of Rebecca emails us or my staff frequently, and she lives in England, and she raised this issue with us specifically for this hearing. And it has to do with FinCEN Form 114, the Report on Foreign Bank and Financial Accounts, or FBAR, which people are required to file, as you know, if they have an aggregate foreign holdings of over $10,000. And for a lot of people living abroad, the FBAR is another confusing form on top of the special reporting that they also have to do to the IRS. Now, as I understand it, that the $10,000 threshold hasn't been updated in decades. And I think the BSA was sometime around 1970. And since it is aggregate, once you have assets above that amount, you have to file the information on all your accounts, regardless of how small they might be. Now, I want to be clear again, I don't want to advocate for anything that impedes your ability to weed out, money laundering or any type of illicit financing. But at the same time, my question is it worth us taking a look at making an adjustment to that? So if you would look at inflation over the decades that it was established from 10,000, if I wanted to do legislation to say, let's take it to 70,000, accounting from 1970s to present, is that something that you could support?
So thank you very much for that question, Congressman Woman Beatty. I think the answer is that we would review the thresholds for FBAR reports as well. I think it's an important issue to review, and in fact, we are in the context of Section 6204 and Section 6205 of the AML Act. We're reviewing the thresholds with respect to CTRs as well as with respect to SARs. In the context of Section 6216 of the AML Act, we're also reviewing more generally the effectiveness of the reports that we receive. And in that context, I think it's important to review the thresholds with respect to FBARs. But I'd like to say that FBARs are incredibly important to law enforcement, and they're incredibly important to IRS as well. Some law enforcement agencies, particularly those investigating tax-related crimes such as IRS CI, work mainly with FBARs and or the absence of FBARs to be able to generate cases, and they use the account and ownership information to generate cases and to target tax evaders and the like.
My time is almost up. Mr. Director, let me just say this because the clock is running out. I think I hear you and get the gist of it. I'm not trying to impede them. I'm just saying let's take a look at the $10,000, keep the same rules, but let's lift the bar.
We can take a look at that.
Thank you. Thank you, Mr. Chairman.
Gentlelady's time has expired. The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Thank you, Chairman. Appreciate you being the chair. I join the ranking member in wishing Mrs. Waters a speedy recovery from COVID, and nobody's family suffered more than hers, losing her sister very early in the pandemic. And thank you, Acting Director, for being here today. Very helpful testimony. Would you be willing to come once a year and visit with the committee on behalf of FinCEN?
Of course, yes.
Thank you. That'd be very helpful. I think we were all so pleased with your briefing the other day, and we just don't have access to this level of detail. I think it's very helpful to members. Mrs. Beatty raised the issue of thresholds. Others did as well. I just would remind the acting director that Secretary Liu, Secretary Mnuchin were not particularly forthcoming or helpful in trying to review or raise those thresholds. We had bipartisan bills here, I think, Mr. Himes, for 3 Congresses that would have done some modest inflation adjustment of the CTR and SAR, SAR thresholds. So I'm glad to hear you're going to look at them, and we would welcome Secretary Yellen being a more forthcoming interlocutor on trying to raise those somewhat without impeding law enforcement. I think that's possible. Would you agree?
So again, Section 62.
Don't repeat the section numbers, just do you agree or not agree? You agree that raising the thresholds is a possibility and might be beneficial to both sides?
We're looking at a number of proposals with respect to raising thresholds and seeing what the impact will be.
Good, I appreciate that. Have you done a cost-benefit analysis at Treasury using your great macro resources on the new Corporate Transparency Act proposal for beneficial ownership?
In the reporting rule, NPRM, that we published last December, it includes a regulatory impact analysis that includes an evaluation of what the costs would be to business, yes.
So when it was proposed, I was very opposed to this style. I'm not opposed to improving beneficial ownership, never have been, but I was very opposed to Mrs. Maloney's bill. I worked very hard against it and offered alternatives. Again, our mutual good friend, Secretary Mnuchin, didn't agree, nor did the chairman of the Ways and Means Committee here, so I lost out on my approach. But I think you're going to find this is going to be one of the most expensive regulations ever imposed on American business. So I want to associate myself with Mr. Williams' comments. And just in the last 16, 17 months of the Biden administration, the American Action Forum has released that the administration's regulatory costs on the economy is up about $200 billion annualized from the Trump level. So we're all very sensitive to the imposition and cost of regulations on our small businesses. And I think Mr. Williams summarized some of the concerns we have about the beneficial ownership rule. Would you be willing, when you get ready for that notice for final rulemaking, to brief and receive some final comments, not approval, we understand separation of powers, but some final comments from Ranking Member McHenry and Chair Waters? Because I know they have divergent views on this. That makes it hard on you, we recognize that, but would you be willing before that rulemaking's published to visit with Ranking Member McHenry about it?
So thank you for that question. Again, you know, we're subject to APA requirements with respect to notice and comment rulemaking. To the extent that, you know, from my perspective, you know, from a FinCEN perspective, we're happy to brief you on the rules and the contours of the rules as well, but it would have to be subject to the notice and comment rules, and we'd have to follow those rules in terms of any.
Well, let's think
briefing
about that
provide.
because we are concerned about the cost of this rule. Let me shift comments and talk about the topic really of the day for Mr. Himes, Ms. Waters, Mr. McHenry, and all of us, and that is what we're doing to track down Russian oligarchs. You were very helpful and forthcoming the other day in our brief. But of course, we've sanctioned Russia and Russian people and Russian entities since, particularly since the Crimean invasion back in 2014. And you cited the SARs and the possible connection of SARs, 271 out of 2,000 that were referred to law enforcement. Let me narrow that a little further and ask you, since 2014, are you aware of a prosecution of a Russian connected to sanctions evasion that was related to a SAR filed in the U.S.?
We have taken compliance efforts with respect to entities linked to Russian ransomware activities. In terms of a specific Russian prosecution with respect to sanctions evasions, I'd have to refer you to DOJ on that question, and I'm happy to follow up with you on any information that we might have.
Thank you. I yield back, Mr. Chairman.
Gentleman's time has expired. The gentleman from Illinois, Mr. Casson, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Acting Director Doss, nice to see you again. I want to follow up on the conversation you and I had a couple weeks ago, specifically about the Deutsche Bank mirror trades in 2014 and to the degree that we've closed that barn door. This was, of course, the situation where Russians were executing simultaneous buy and sell trades to move rubles into hard currency. And when we talked about it a couple of weeks ago, I was thinking about it in the context of we closed the barn door, that Russia can't use that to either influence foreign politicians, as they were using in 2014, or to get hard currency to prosecute their war crimes in Ukraine. It's, of course, back in the news this week with the news of Val Schmidt's death, who was the whistleblower who, among other things, disclosed what was happening at Deutsche. What I'd like to understand with you from a FinCEN perspective, do you have jurisdiction or do you receive SARs reports if a non-U.S. actor is laundering money through non-U.S. markets? I think the answer is no, but I just want to clarify that my understanding's right.
Your question is whether or not we receive SAR reporting when a non-U.S. actor launders money through non-U.S. markets. Is that correct, sir?
Yes.
So if there is a touch point to the U.S. financial system and the financial institution is able to identify any illicit activity, we would receive a suspicious activity report. If the action is entirely outside of U.S. jurisdiction and it doesn't have a touch point with respect to a U.S. financial institution, I'm just struggling to see a situation in which we'd see a suspicious activity report.
Okay, so if I understand, FinCEN is a member of the Egmont Group, which is sort of trying to tie that with other, your peers in other countries. Would you, let's say bad actor, not a U.S. flag, doesn't trigger a SARS report, and they're in two other countries, would you find out about it? Do you have jurisdiction? Can you put the appropriate walls up if that's flagged by one of your partners in the Egmont Group? Is that what the Egmont Group is intended to do? Do I have that right?
You have that right, Congressman. It would depend on a couple of different considerations. One is we have the ability to ask questions of our Egmont Group partners with respect to law enforcement actions or investigations that might be ongoing in the United States, and to identify whether or not our counterpart FIUs might have that information. There may be situations in which our Egmont Group partners spontaneously disclose that information to FinCEN, and if they did disclose that information when they think that the United States might have an interest, we would review that information and, if appropriate, pass it on to law enforcement agencies.
No, okay, well, this is rapidly going to get into areas where this may not be the appropriate forum to discuss this, but let me just sort of walk through where my concern is and comment as you see fit. We know from the mirror trading scandal that Deutsche Bank broke the law. They were fined, thank you. We know that they were influenced to some degree by Russian money. They were tempted by the commissions, and we know that Russian money has been used to corrupt an awful lot of people in our world, sadly, and that's a part of what they've been using that laundered money to do. As we now try to make sure that they don't have the resources to continue to commit these atrocities in Ukraine, that all of our sanctions are effective, have we and our international partners sufficiently closed that down, or are we at risk that just one bad corrupted actor, one bad country can still provide the gap so that Russia could find their way through that, and all of a sudden the money is into somebody who we don't know about or some company that is not triggering any flags for us? Are we doing enough to close that down? Is this a U.S. law issue? Is it an international law issue? How do we make sure, and some of that gets well beyond the jurisdiction of this committee, but I would like to understand as we impose these sanctions that we have a good understanding that they are actually going to affect the people intended and are at the very least consistent with where those gaps are in international law. I realize it's a big, meaty question. Would welcome your comments and maybe continued conversation, given the time.
I'd be happy to continue the conversation with you. I think on our part, in terms of ensuring that we understand how Russia is evading sanctions or abusing the financial system, we've actually set up a group with our counterpart FIUs, our closest partners, for example, the UK, the EU, Australia, and others, to be able to work together to identify key issues with respect to Russian illicit finance and to be able to exchange information quickly and on an effective basis to be able to support law enforcement and the intel community in terms of targeting exactly the types of activity that you're discussing.
Okay, well, thank you, and let's have a follow-up conversation. I yield back.
Gentleman's time has expired. The gentleman from Georgia, Mr. Loudermilk, is now recognized for 5 minutes.
All right, thank you, Mr. Chair. Acting Director Doss, good to see you again. I'd like to start off by discussing the implementation of the anti-money laundering and beneficial ownership reporting law. The proposed rule's definition of substantial control and ownership interests are quite complicated, which would make it hard to apply them consistently. This problem, it's it's going to be compounded, in my opinion, for financial institutions if FinCEN uses those same definitions in an updated customer due diligence rule. My first question is, will FinCEN take steps to simply define these definitions before the rule is finalized?
So thank you for that question. The substantial control rule is a rule that's covered in the NPRM. We received a number of comments on the substantial control rule, the contours of it, the benefits that it might provide in terms of providing a highly useful database for law enforcement, as well as some of the complexities in terms of implementation of that substantial control rule. We're taking a hard look at those comments in the context of moving towards a final rule, and we'll consider issues that were raised in the comments, including by a number of you in terms of the contours and the costs imposed as well.
Okay, and I appreciate if you would keep us informed on the direction that you're going and the decisions that you make there. Another question is, the law requires FinCEN to minimize burdens on businesses, but it appears that FinCEN is not following that requirement. For example, FinCEN has expanded the scope of who is required to file, expanded the types of information that must be filed, and set very short compliance deadlines. So my question is, are there examples in the rule where FinCEN has minimized compliance burdens as the law requires?
So again, we proposed a rule that would develop a highly effective database for law enforcement to use. We evaluated the impacts that businesses, and particularly small businesses, would have. We estimated the costs of the rule for small businesses would be at $45 per business for a filing, for the initial filing, which is comparable to the cost that small businesses would have to pay just to establish an LLC, which ranges anywhere from $40 to $500 for, depending on which state is involved in terms of incorporating it. Again, we received a number of comments around both the costs and the implications for small businesses, as well as the complexity of the rules. Again, we found the comments to be incredibly helpful and instructive, and we're taking all of those into account in terms of next steps as we work towards a final rule.
And so I trust you'll keep us informed on the direction that you're going, and again, as the law requires, minimize those burdens as much as possible. I'd like to follow up on something that my colleague, Mr. Williams, discussed, and that's Section 6205 of the Anti-Money Laundering Act, which requires Treasury to conduct a rulemaking to consider changing the dollar threshold for SARs, suspicious activity reports, and currency transaction reports, the CTRs. This is badly needed because institutions are currently required to file more than 20 million CTRs and SARs every year, most of which have no value to law enforcement. In fact, a 2018 study indicated that 4% of SARs and 0.44% of CTRs warranted additional review from law enforcement. That's a very low number compared to the amount of data that businesses are required to report. So, question. What's the status of the reports and rulemaking required by Section 6205?
Could you repeat the question?
So what's the status of the reports and rulemaking required by Section 6205? How are you going to modernize this reporting requirement?
So we are reviewing we are working on the reports under 6204 and 6205. We have engaged with all the consulting agencies that are involved. We're reviewing a number of different proposals from a number of different sources with respect to the CTR and the SAR reporting thresholds. We expect to issue that report later this year in conjunction with the two reports together. Again, we're currently evaluating the issue. We're very focused in terms of priorities, given there are resource constraints on getting the beneficial ownership rule done and the real estate process moving forward as well. But this is something that we're actively working on, and we hope to get it done as quickly as possible.
Well, thank you. I see my time has expired, and so any other questions I'll submit for the record, and I yield back the balance of my time.
Gentleman's time has expired. The gentleman from California, Mr. Sherman, who is also the chair of the Subcommittee on Investor Protection and Entrepreneurship in Capital Markets, is now recognized for 5 minutes.
Thank you. Acting Director, when Secretary Yellen testified before us a few weeks ago, I asked about the time frame by which we can expect the beneficial ownership database to be established. As you know, that database is required under the Corporate Transparency Act, which passed January of last year. Under the law, the database is supposed to be implemented within 1 year, so it's a few months late. Secretary Yellen pointed out that FinCEN has proposed one of the 2 rules that the agency believes are necessary to establish the database. I know you're a few months late now. Can you give us some detail as to what's preventing you from meeting the timeline, and more importantly, when we can expect the database to be established?
Thank you so much for that question. Again, the Corporate Transparency Act requires that we issue 3 rules: a reporting rule that governs the information that's provided to FinCEN that goes into the database, a second rule, which is the access rule, which provides the guidelines and rules for how law enforcement agencies and others access the database. And then it requires us to issue revisions to the CDD rule, which needs to be issued 1 year after the effective date of the reporting rule. As the Secretary mentioned, we are very focused in terms of the use of our resources in getting the access rule, MPRM, done by the end of the year. And we're working hard to do it. At the same time, in parallel, we're working on the comments to the reporting rule, MPRM. We received a substantial number of comments. It's an incredibly complex issue, and it's incredibly important for some of the reasons stated here today that we just get it right.
Okay, so Congress gave you a year to do it. You think it'll take 2 years to do it. You're confident, or how confident are you you'll get it done by the end of this year?
Well, again, we're committed to getting the access rule, MPRM, done by the end of this year. Again,
Will that then lead to the establishment of the database, or do you have to then do the revisions to the third rule?
I do not have a timeline for the establishment of the database. Again, we're working incredibly hard, given the resource constraints that we have and the complexity of the issues.
Okay. I'll urge you to get this done as quickly as you can. It's important.
Again, we're very focused on getting it done as quickly as possible.
When Secretary Yellen came before us committee last month, I highlighted a recently published article in Washington Post saying yachts and mansions are easier for us to track down when we're going after the Russian oligarchs than interests in hedge funds and equity funds, venture capital funds, et cetera, because they're not required to disclose beneficial ownership information to you or to the SEC. In February, the House passed the American Competes Act, which included an amendment I offered, which would require issuers of exempt securities to file beneficial ownership information with the SEC with regard to large transactions. Would you agree that increased federal government visibility into our $11 trillion private securities market, and especially knowledge as to beneficial ownership, would help us combat the Russian oligarchs?
So thank you for that question. As we've noted in our unified regulatory agenda, we're actively considering a proposed rule that would address existing gaps in regulatory coverage for investment advisors, taking into account the comments that were submitted during a NPRM, a Notice of Proposed Rulemaking process that occurred in 2015. Again, we're working from a FinCEN perspective with Treasury's Office of Terrorism Financing and Financial Crimes in a number of different efforts to be able to better understand the risks presented by investment advisors as we think about what the appropriate rule might look like and what the scope and coverage might look like as well. In the meantime, we're very focused on this issue in the context of Russian illicit finance and the way Russian oligarchs are abusing the financial system. And again,
try to squeeze in one more question. We've sanctioned 400 individuals and entities, as well as, of course, the Russian government. The crypto world is not big enough to handle the major governmental transactions, but they're big enough for some of the oligarchs. We hear that the crypto industry transactions is a technology which would allow for traceability. However, privacy coins like Moreno and protocols like Lightning Network can be effective in obscuring transactions. How focused is FinCEN on looking at crypto at the oligarch level?
We are focused on it. Again, we issued a sanctions evasion alert around potential evasion using cryptocurrency. And again, we're very focused on this issue in terms of trying to identify means through which cryptocurrency might be used to evade sanctions or to bolster the Russian economic system as well.
Gentleman's time has expired. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
I thank the chairman, and I thank Acting Director Doss. Thank you. Thank you for your time, and frankly, taking time to meet individually with some of our members, including me and my staff. So, appreciate the challenge that you're up against. As Mr. Hill highlighted, I've worked passionately and vigorously to stop some of the things you're working on, but they passed anyway. And so they're the law, so I understand that you're implementing them. I do hope that we can make them less bad than they would potentially be, and I share some of the concerns that he and Mr. Williams and others have highlighted. And so thanks for listening, and we hope that we can continue to collaborate as we go through this development process. And so today I'm in the process of introducing the Financial Crimes Enforcement Network Improvements Act, which would provide additional accountability. It would provide a path for your role as the director to be a Senate-confirmed position, and provide some of the things that you've personally been willing to do, like come before this committee and testify in an open setting, and also meet with us in a classified setting, because it is really important for our nation to have, I think, the world's best financial intelligence organization. And so I know that we have an advantage because we have the power and influence of the U.S. dollar, but we hope that advantage is also not just great people, but great authorities for our FinCEN. And when you look at how we go about it, inherently in American intelligence, we're also constrained in some ways that maybe more authoritarian regimes wouldn't feel hindered by, which is we need to protect civil liberties, and we need to do these things in a way that provides privacy and due process, and is concerned about the impact on our economy. So, we probably disagree on how what the costs are for compliance for small businesses. But I highlighted another thing just recently. I'm talking to the Congressional Budget Office. They thought that student debt was going to be better when the government operated student lending programs. And they said we were going to save $68 billion by taking over student lending. What we know is actually, just in defaults alone, it's going to cost $500 billion. So the financial modeling on all this is pretty bad. So, when we just have these debates and you say one thing, it's just words. When you look at the financial models, it's really just understanding what is it really like. So as a small business owner, as someone who spent a lot of time in the private sector, this is a very disruptive thing, aside from the cost, because it assumes that the citizen somehow has to come to the government to get permission to operate. And in fact, that's exactly what my colleague, Mr. Foster, highlighted. Perhaps the most disturbing thing that I've heard is the idea that to access your own money, that you need to get some identity, that's some globalist conforming identity stamp, and then everything that you want to do is tracked and monitored. And then when they want to rewind the tape and figure out who it was, they may not even need to get a warrant. They just come and expose who that person is. And I think that the way that we protect our way of life is by being less like China and more like America, because this is exactly what China's in the process of implementing. And when they hear the things that you're working on, people back home fear that that's exactly what you're part of building, is a system, frankly, a dystopian system where the average citizen needs to get permission to access their own money. I think that's why the self-hosted self-custody of crypto, basically if you download software and you use it, somehow you could become a criminal under this self-hosted rulemaking that's been proposed. So could you talk about self-custody and where FinCEN's headed with that?
So thank you for that. First of all, I entirely agree with you in terms of the importance of FinCEN's mission and getting it right. Second of all, we're very focused on privacy interests in the context of what we do. That is an important concern in terms of the information that we get, as well as how that information is used. Third is in terms of the self-hosted custody wallet rule, the unhosted wallets rule, as we call it. Again, we received a number of comments. They raised a number of privacy considerations in those comments, both with respect to the unhosted wallets rule as well as the travel rule. We're taking a close look at that and reviewing it in our consideration of next steps.
Well, I hope that the Keep Your Keys Act will feature prominently, which is it protects the ability of the ordinary citizen to continue to own digital assets and, frankly, self-custody. So thanks for the work, and I yield, Chairman.
Gentleman's time has expired. The gentleman from Massachusetts, Mr. Lynch, who is also the chair of the Task Force on Financial Technology, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thanks for holding this hearing. I want to thank our witness as well for his accessibility. As Mr. Davidson noted, Mr. Das has been very, very good at his availability. I do want to ask, I look at the funding for FinCEN, and I also look at the responsibilities that you have. And I know that despite the importance of the role that FinCEN plays, the current funding levels are about 30 million short of what we would recommend for your agency. And I'm just curious as to how do you found that issue. Are there trade-offs that have to be made? I know that that Congress did make an additional appropriation in connection with the Ukraine situation, but where do we stand now, and how are you doing that workaround where you don't have enough resources to hire the number of agents that would be appropriate given the scope of your responsibilities? Could you talk about that a little bit?
Sure, I appreciate that question about our budget. Again, we appreciate the funding that was provided under the FY22 appropriations as well as the Ukraine supplemental. The FY22 appropriations will in large part go to supporting our IT system as well as our beneficial ownership database. The Ukraine funding will be used in a number of different respects to help support our analyst team to be able to track and trace funds related to sanctions evasion and illicit finance as well. Where the FY22 appropriations comes up short is with respect to funding to support hiring and additional FTEs to be able to do all the work that we have to do. As a result, there are huge trade-offs that are made in terms of our ability to engage in enforcement and compliance work that our Office of Enforcement and Compliance does to be able to ensure that financial institutions, cryptocurrency exchanges, and others have a reasonably designed and effective AML CFT programs. It constrains our ability to get the rules and regulations done to implement the AML Act. And that's incredibly important because we're simply missing deadlines at this point. It constrains our ability to hire analysts, particularly in the cryptocurrency area, to be able to do the type of analytics that's required to understand how cryptocurrencies are flowing and contributing to illicit finance. And our team is incredibly talented, but they're incredibly small as well, and they're just outmatched to the challenge, not in competence, but in terms of resources alone. And we continuously run up against challenges in terms of trying to figure out who is available to do work around cryptocurrency issues to be able to combat that illicit finance. And again, we're constrained in our ability to engage in public-private partnerships and outreach. Forums like the FinCEN exchanges and innovation hours to be able to execute on the AML Act's directive to engage more with financial institutions so they understand how law enforcement is using the information that FinCEN has, so we can provide feedback to those financial institutions in terms of what works and what doesn't work. And so there are a number of different fronts in which we are just coming up short in terms of fulfilling what I think the AML Act intends for us to do, which is
Director,
a robust framework.
All right, great. I only have about another minute. I do want to get another question in. So with the advent of digital wallets, we've got a whole area of vulnerability now. The New York Times just wrote a great piece about the vulnerability of these digital wallets, and 19 million Americans last year were scammed or had their money stolen on these platforms because of the vulnerabilities in these digital wallets. This is sort of a growing phenomenon. There's a big adoption rate, a very high adoption rate in the economy right now. Does FinCEN, I mean, those are financial crimes. Does FinCEN have visibility on that new development? And tell me, how are you redirecting resources to that problem?
So cryptocurrency exchanges are subject to FinCEN's AML-CFT program requirements. They're required to file suspicious activity reports if there is any indication of a financial crime or if they reasonably suspect financial crime. So we would have a certain degree of visibility if it filters through in our suspicious activity reporting.
Okay, thank you. Mr. Chairman, I yield back. Thank you.
Gentleman's time has expired. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Mr. Chairman. The Russian invasion of Ukraine has put the work that the Financial Crimes Enforcement Network, known as FinCEN, does at the forefront of our priorities here in the committee. As Russia's ruble tanked after the sanctions took hold, the incentive for Russian oligarchs to launder their money through the United States grew substantially. We must remain firm in punishing these bad actors and flexible enough to find the strategies that allow them to launder money into the country and our financial system. These goals are critically important to our national security, but we also have an obligation to ensure that the work that FinCEN does and the rules that it creates are not overly burdensome to small businesses. So Acting Director Dawes, corporate transparency was written to specifically exclude sole proprietors in its definition of a reporting company. However, FinCEN has failed to make that distinction in their reporting company definition. Will FinCEN explicitly exclude sole proprietors from the definition of a reporting company?
So as the NPRM states, reporting companies that are required to submit beneficial ownership information include corporations and LLCs and other similar entities that are required or that create or form an LLC or a legal entity through the submission of a document to a state secretary of state. That is the scope of the rule as we've defined it in the NPRM. We requested a number of comments and questions around the scope of the reporting company definition to better understand who or what type of legal entities that definition would capture. And we're taking stock of those comments at this point.
Okay. Well, in addition to the potential regulatory burdens of some FinCEN rules, I'm also concerned about FinCEN's cybersecurity. FinCEN's role in combating illicit finance would make it a target of cyber attacks from Russia and China. So Acting Director Dawes, please talk about what you're doing to ensure that a cyber breach of FinCEN would not jeopardize the information of small business owners.
That's an important concern. Again, we have a robust IT framework. Again, as I mentioned previously, we have what is called a segmented IT architecture, which makes our IT system less vulnerable to hack and intrusion. We conduct regular penetration testing to ensure that any vulnerabilities are exposed and that we prevent any targeted efforts with respect to our IT system. We stay in close communications with Treasury's Office of Chief Information Officer as well to identify any potential threats to our system. And again, we apply the highest level of security under the FISMA levels of security as well. So we work very hard to ensure the integrity of our IT database, and we're taking all the precautions necessary to do so.
All right, thank you. Obviously, it's critical that we get the balance right between keeping illicit financing out of our country and keeping compliance burdens low. Small businesses are the backbone of this economy. We need them to succeed very much in America. In addition to the regulatory burden, we need to ensure that FinCEN can be a good steward of information. The new beneficial ownership database will contain personal information from millions of small business owners. Clearly, if someone were to breach that database, it would be a total disaster. Thank you, Mr. Chairman. I yield back the balance of my time.
Gentleman yields. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
I thank the chair, and I thank you, Director Dawes, for testifying today. I do apologize. I'm between two hearings, so I don't want you to think my absence here is any lack of interest in your work and what you do. So thanks for being here and for your testimony. I'd like to talk about FinCEN and combating gun violence. And I have a bill that was noticed in conjunction with this hearing, the Gun Violence Prevention Through Financial Intelligence Act, that would require FinCEN to collect and analyze bank data to determine what financial indicators might precede a mass shooting, a terrorist attack, gun violence in our communities. And that the FinCEN would be required to issue an advisory on how banks should use those indicators to comply with their suspicious activity reporting. Insufficient data exists. Or if insufficient data exists, FinCEN is required to report to Congress within 1 year about why the information they collected was inadequate to publish an advisory. I don't need to tell you or anybody in this room, gun violence hunts down far too many innocent Americans. Every single year, those numbers are increasing in dramatic fashion. And I saw a tragic statistic earlier this week that guns have become the leading cause of death among children, leading cause of death in 2020. Our inaction on this issue is, I think, shameful, unforgivable, and really intolerable. We have to have an honest discussion around gun violence. So, Director Dawes, right now, what does FinCEN do? Does FinCEN collect data relative to financial indicators of gun violence? If not, what should we be doing? How can we help financial institutions identify risks of mass shootings, of terrorist attacks, of gun violence? Would you tell us about FinCEN and gun violence?
So I appreciate that. And you know, the issue of gun violence is very serious, and the impact on children is incredibly important as well. It's tragic. You know, in terms of suspicious activities related to gun violence, again, you know, our reporting regime is one in which financial institutions identify suspicious activities where they know, they have reason to know or suspect that there is some illicit financial activity that is ongoing. They would report that information. We can work with you in terms of identifying whether or not there may be use in terms of identifying red flags or typologies and have a conversation around that. But you know, primarily at this point, it is what suspicious activity reports are filed by financial institutions around this issue.
And do those reportings include suspicious activity connected to gun violence? Does it specifically lift that up?
It could ultimately include that if that is what a financial institution reports to us.
Would you be able to maybe collect that? And
I would have to look closer at this issue to be able to identify whether or not suspicious activity reports specifically raise this issue. So I'd have to get back to you on this.
I would really appreciate that. That will help inform the legislation that I'm trying to move forward on, and maybe that is an avenue into combating gun violence that will not be politicized, that will be in a bipartisan way embraced. So if you could collect that data, share it with us so we can learn, that would be really terrific. I think I have a little more time. I'll try one more area of questions. I think you mentioned in your testimony that FinCEN has, quote, issued 2 Russia-related alerts to provide financial institutions with more information about typologies and red flags in order to support U.S. governmental efforts to sanction Russia. You talked about robust engagement with financial institutions. Were your advisories received? In your opinion, how well are financial institutions complying with the sanctions that have been put in place and are continuing to be put in place? What additional resources do you need to ensure full implementation?
So I appreciate that. believe the alerts and advisories were well received by financial institutions in terms of providing additional guidance with respect to red flags and typologies. Financial institutions are sensitized to the issue of both sanctions evasion as well as oligarch assets being used or the U.S. financial system being used to hide Russian oligarch assets as well. And, you know, my sense is that we're seeing a number of very useful suspicious activity reports coming from U.S. financial institutions with respect to Russian oligarchs, as well as with respect to sanctions evasion. In terms of resources, again, the most important thing for us is to get FTEs and funding to be able to support hiring so that we can do the analytics necessary to evaluate those suspicious activity reports, to evaluate the transactional information that we receive so that we can take that information and translate and provide it to law enforcement as well.
The gentlewoman's time has expired. The gentleman from Tennessee, Mr. Kustoff, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and Acting Director Doss. Thank you. Two things. First of all, for your service, and secondly, for agreeing to appear today. We appreciate it. If I could, I thought this was timely in the Wall Street Journal, the Wall Street Journal's website today. There was a story that posted, and the headline is "Russian Sanctions Complicate Paying Ransomware Hackers," and it cites FinCEN. But my question to you is, in terms of reality or practicality, do we have American businesses or companies that have been targeted by ransomware hackers that have to pay ransom to entities that we have sanctioned?
There may be situations in which a U.S. business or a company may be subject to a ransomware attack where the ransomware actor is a sanctioned person.
This article, again, it posted this morning, it said the U.S. Treasury's Department Office of Financial Assets Control and its Financial Crimes Enforcement Network both have highlighted ransomware payments in recent months. OFAC said in September that it strongly discourages extortion payments and reiterated that it can take action against payers. I guess from a practical standpoint, if a company has been targeted with ransomware, they have to pay a ransom, and the ransom is to be paid to an entity that's been sanctioned by us. What recourse do they have?
So I appreciate the question. Again, I'm here to represent FinCEN and FinCEN's authorities. In terms of the answer to your question, that falls within the scope of OFAC authorities and engagement with the Office of Foreign Assets Control in terms of exactly how its sanctions apply and what the contours might be and what flexibility there might be in a particular situation. I'm hesitant to go in that direction.
Fair enough. Let me I think you've answered it, but I'm going to ask this one more time in a different way. Do you or FinCEN know of American businesses or entities that have been targeted with ransomware by companies or by entities in Russia that have been sanctioned?
I'm not aware of particular situations in terms of that particular question.
Okay. I'm a former United States attorney. I think I may be the last presidentially nominated United States attorney that's been confirmed by the Senate and the House of Representatives. So I'm asking this with that in line and that in mind, is that I don't know that FinCEN has an obligation necessarily to the people. I think you do to Congress to provide evidence of how effectively or efficiently you work. I believe the ranking member asked about how many convictions have been led based on FinCEN's work and actions. I'm not going to ask you anything that specifically, but if you were talking to any of my constituents, how would you describe the effectiveness or efficiency of FinCEN?
So first of all, in terms of this hearing, it's clear that we need to do a better job in terms of communicating how effective FinCEN's work is and how effective we work with law enforcement and with the intelligence community. Again, the work that we do is invaluable in terms of supporting law enforcement and the IC's efforts and OFAC's efforts to target bad actors that might abuse the U.S. financial system and, for that matter, the international financial system. The information that we use is critical for law enforcement to go after a range of criminal threats, everything from human smuggling, human trafficking, online child sexual exploitation, money laundering by drug trafficking organizations. Across the board, all of the types of criminal activity that are identified in our AML CFT national priorities, the information that we get is, it cannot be overstated in terms of how valuable it is for law enforcement to be able to identify, target, and then prosecute individuals.
I appreciate that. Is there anything you think that FinCEN could publish, not for the American people, for us, to demonstrate, again, your effectiveness and efficiency?
So the first step in that, again, is the report required under Section 6201 of the AML Act that DOJ is required to provide in terms of the value of BSA information for DOJ and for law enforcement. I'm happy to work with you in terms of other measures or indicia of success as well to be able to make a better case for what we do.
Thank you, sir. We appreciate your service. Thank you. I yield back.
Gentleman's time has expired. The gentleman from New Jersey, Mr. Gottheimer, who is also the vice chair of the Subcommittee on National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Mr. Chairman, for holding this critical hearing. As technology advances and terrorists continue to innovate, federal enforcement efforts must keep pace so that we can crack down on each new method of financing terror. So I appreciate this conversation. Mr. Das, thank you for being here with us today. I'm a strong proponent of establishing appropriate guardrails around the cryptocurrency industry to ensure the market matures in the United States. The industry wants clarity and consistency. One of the most critical areas to me is the area of anti-money laundering and counterterrorism financing. What is FinCEN doing to help prevent actors such as Hezbollah and Russians seeking to evade sanctions from utilizing cryptocurrency as a finance tool?
Again, thank you. For instance, FinCEN's been at the forefront in terms of ensuring that cryptocurrency exchanges and cryptocurrency administrators are subject to the same AML CFT program requirements that MSBs are and other financial institutions are as well. Again, you know, all cryptocurrency exchanges, because of their AML program requirements, file suspicious activity reports where there are indicators or they may have a reason to know or suspect that there might be illicit financial activity, and that includes activity by foreign terrorist organizations and other bad actors as well. When we do receive those suspicious activity reports, we work very closely with the intelligence community and with law enforcement.
Thank you. Last year, FinCEN released its first national anti-money laundering and counterterrorism financing priorities list, as you know, which included domestic terrorists such as those radicalized online. This week, I'm sending a request to the Appropriations Committee to request additional resources for your agency, particularly related to targeting domestic financing. Could you elaborate on how this funding could be helpful and how FinCEN could use this funding to stop terrorist attacks before they even get beyond the planning phase?
I'm sorry, I'm not aware of the additional financing with respect to domestic violent extremism and this bill.
God, are there more resources that you think you could use and utilize and need?
So yes, we need additional resources across the board with respect to everything that FinCEN does in terms of its support for law enforcement and for the intelligence community across the board with respect to terrorism.
And can you talk a little bit more, in the remaining minutes we have, can you talk a little bit more about the priorities list?
Sure. Again, you know, the priorities list was developed over a period of time, 180 days, in terms of significant engagement with the law enforcement community and with respect to regulators and others, in terms of identifying the key priorities that the United States faces in terms of combating criminal activity and other types of illicit activity as well. The intent of the AML CFT priorities list was to provide financial institutions an understanding of what law enforcement priorities might be for them to better hone and direct their AML-CFT programs to identify suspicious activities that might align with the interests of law enforcement and the types of priorities that we have in the United States. What we've heard from financial institutions is that it's been valuable to the extent that that financial institutions have used those AML-CFT priorities, that it's been valuable in terms of them developing their AML-CFT programs and targeting their AML-CFT programs as well. Again, the AML Act provides that we need to issue regulations that direct financial institutions to incorporate those AML-CFT priorities into their AML-CFT programs. We're working on that regulation at this point in terms of what the contours of that might look like.
Thank you. I yield back. Thank you, Mr. Chairman.
Gentleman yields back. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman. Thank you, Chairman Himes, and thanks to Ranking Member McHenry and Acting Director Doss. Thank you for being here and for spending so much time with us today. It is good to see you again, and I appreciate you meeting with me earlier this week. It was great to discuss the issues that have been plaguing independent ATM operators, as you discussed earlier with my colleague, Mr. Lukemeyer. As many people know, independent ATM operators across the country have had a tough time finding banks that will provide them with services since Operation Choke Point. Despite officially ending in August of 2017, the operation to debank certain industries is still impacting ATM operators today. So I was thankful to hear your commitment to work with the other agencies to issue a joint statement underscoring that there is no particular risk associated with that category of customers. Acting Director Doss, as I mentioned in our meeting, I am concerned about the current BSA process in which the federal government deputizes financial institutions. And I would say maybe at this point, just to broadly state my view that the cost of this regulatory framework, I think, is troubling, and certainly even the path that we're headed down with respect to beneficial ownership is troubling to me, and the cost to our business community for that regulation is something that's very much in my sights. I spent 10 years on a bank board where I was tasked with looking at suspicious activity reports, and the lack of feedback that banks and other financial institutions receive on whether a specific filing was helpful in assisting law enforcement is extremely troubling to me. As I have said, it is like shooting a target in the dark with a blindfold on. Acting Director Doss, would it be possible for your agency to effectively do its job without the participation of financial institutions?
Financial institutions are one of our most important partners in being able to make the AML system.
Thank you. And it costs them a lot of money to help you do your job by sending the data the law enforcement then has access to. I think the current system is somewhat broken, where these financial institutions are spending tremendous amounts of time and money on BSA filings, unfortunately, mostly without any feedback. There must be a more efficient process. And I know you've talked today about some of the efforts aimed at hopefully giving them some of that feedback. How much money do you think financial institutions spend every year on BSA filings in the United States?
So I don't have a particular statistic on that point, but
I think we could agree it's a lot,
yes,
right? And certainly you've talked about the resource constraints that FinCEN faces in terms of fulfilling its mission of dealing with that data that comes to you. Would it be useful to tell financial institutions whether a filing was or was not valuable to law enforcement?
Again, the AML Act places a focus in terms of helping financial institutions understand how we're using our suspicious activity reports in relation to providing it to law enforcement and others. We're using a number of the vehicles through the AML Act to engage with financial institutions, including FinCEN exchanges, innovation hours, et cetera, to help them understand better how we're using suspicious activity reports and what is valuable in terms of what they might be providing to us in terms of suspicious activity reports.
In the current system, does the law enforcement or other agency user of FinCEN data have to explain on an individual inquiry basis what the data that they're gathering is going to be used for?
There is no requirement on law enforcement to provide a specific SAR by SAR analysis of how they're using that information.
Do you believe that your current authority, FinCEN's current authority, would enable you to implement some sort of requirement relative to a requirement that the user explain what they're seeking data for each time they access the database?
So in terms of our engagement with law enforcement and financial institutions, I think that we can work under the existing framework to provide greater transparency in terms of how law enforcement may be using suspicious activity reports. Again, you know, suspicious activity reports are just one piece of what law enforcement does in terms of an overall investigation. It complements information coming from a number of different sources, through subpoena authority, through other investigative techniques. So often drawing a one-to-one line between a suspicious activity report and a particular investigation or prosecution is just challenging.
I understand that, and I guess I'll just conclude, if you'll indulge me for a second, by saying I think what I'm hearing today from a large number of the members is that we want to see that kind of quantitative, that kind of actual objective data. And so with that, I yield back.
Gentleman's time has expired. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes. Mr. Garcia, you are recognized for 5 minutes. I don't know, can't tell if you're muted.
Thank you, Mr. Chairman, and of course, Acting Director Das, for your testimony today. At its best, FinCEN has the potential to set a strong anti-corruption agenda, disrupting the shadowy world of shell companies, oligarchs, and arms traffickers whose financial crimes have real harmful consequences for everyday people. In order to fulfill that potential, the anti-corruption agenda requires our support and careful oversight to ensure transparency and progress, and I look forward to your partnership on these issues. With that in mind, I'd like to move on to my first question. The Corporate Transparency Act is the most important change to U.S. anti-money laundering law in decades, and FinCEN's proposed implementation rule is a strong step in that direction. However, as my colleagues have noted, several phases of rulemaking are left. Final rules have been overdue since January 1st of this year. Will FinCEN commit to issuing final rules by the International Anti-Corruption Conference, which the U.S. government will be hosting in December this year in Washington, D.C.?
Thank you for that question, Congressman. We're committed to completing the second notice of proposed rulemaking in the suite of Corporate Transparency Act rules by the end of the year. So we will be issuing a notice of proposed rulemaking with respect to the access rule. I can't commit on a particular timeline with respect to the additional rules. We're doing a lot of work, and we're working as hard as we can in terms of getting those rules done.
Thank you. President Biden's strategic plan for countering corruption acknowledges the importance of a transparent and accessible beneficial ownership registry to effectively combat terrorist financing, corruption, and other crimes. Similar registries in the UK and EU have public accessibility requirements. They also have examples of accountability groups, journalists, and members of the public successfully identifying financial crimes from the available data. But under the Corporate Transparency Act, information from the registry can only be shared for law enforcement purposes as FinCEN works to implement this and future projects? Do you believe that public-facing databases could be more effective than private databases? And how can FinCEN harness the power of civil society in the anti-corruption work that it does?
So thank you for that question. Again, we're focused on implementing the CTA and the Corporate Transparency Act. The Corporate Transparency Act has very specific rules with respect to access by law enforcement, by regulators, by other government agencies, as well as state and local law enforcement. It is prescriptive in this regard, and again, we're focused on implementing the CTA at this point. Again, civil society plays an important role in anti-corruption efforts, and from our perspective, we look forward to engaging with civil society in terms of their feedback and perspectives, either through the notice and comment process or otherwise, in terms of the effectiveness of the database, the contours of the database, and the construction of the database as well.
Thank you for that. My final question on real estate. Home ownership has historically been a way to build modest wealth for otherwise marginalized communities. But as you know, real estate is one of global kleptocrats' most important assets, as my constituents are feeling the effects. While real estate investors take all cash offers from foreign kleptocrats, working class families are priced out from home ownership in their neighborhoods. This problem is particularly acute in Latino and Black communities. And the community that I represent, for example, was harmed during the Great Recession. So I was encouraged to see FinCEN beginning to work on regulatory rules in the real estate sector. Director Das, will you commit to having a rule published by the International Anti-Corruption Conference this December?
We issued an AMPRM last December. We received a number of comments at the close of the notice and comment period, which was in mid-February. We're reviewing those comments and considering next steps in terms of a potential proposed rule. We're working incredibly hard on this as we also work on the beneficial ownership database as well as the other AML Act deliverables. And so it makes it difficult for me to commit to a precise timeline.
Thank you, Mr. Das. Mr. Chairman, I yield back.
Gentleman's time has expired. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Chairman, and thank you, Acting Director Das, for your testimony today. I want to pick up on the online child sexual exploitation conversation. Just want to understand the organization's priorities and how you are effectively combating it. So as an organization, you can give me ballpark, what % of your budget is targeting crackdowns on online child sexual exploitation?
So in terms of the overall budget, it's difficult for me to provide a ballpark, but I can tell you that we have one staffer that's dedicated to the issue. One staffer.
One individual staffer?
One individual staffer.
Does that staffer have
dedicated,
a team?
But in addition, a number of other staffers and a number of other personnel support the effort more generally, but we have somebody who's dedicated to the effort. Full-time across human trafficking, human smuggling, as well as online child sexual exploitation.
How does that, so one staffer, how does that compare to other priorities? Like I don't know, what's the top priority and how many staffers are leading that effort?
Again,
compare that to
this is
money
one
laundering.
full-time staffer. We have folks focused on a number of different fronts across the whole suite of issues around ensuring that we have effective AML-CFT programs in place. Financial institutions are providing suspicious activity reports not only on the many priorities in the national AML-CFT priorities, but as well as particularly on human smuggling, human trafficking, and online child sexual exploitation. That individual staffer is focused on reviewing suspicious activity reports that are filed and then working very closely with IRS-CI, which is very focused on this issue, as well as the Joint Criminal Opioid Detection Enforcement Network, J-Code, which is also very focused on this issue as well. So it's a focal point in terms of collecting the information, looking at the information, and then providing that and working with law enforcement so that they can use that information to investigate these acts.
Okay, and then how closely does FinCEN work with private industry to share information and best practices to identify and stop payment methods for the purposes of online child sexual exploitation.
I apologize, Congressman. If you could repeat that question. I didn't
Sorry,
quite
how
get it.
closely does FinCEN work with private industry to combat online child sexual exploitation?
Again,
on the payment side specifically.
we work with financial institutions in terms of suspicious activity reports and enhancing awareness with respect to this issue. We've issued a couple of different advisories and notices on online child sexual exploitation and child sexual abusive material as well. In 2020, we issued an advisory around this issue, specifically was a supplemental advisory. And then in September of 2021, we issued a notice that identified this as a particular issue of focus for financial institutions, especially against the backdrop of the pandemic. We identified a particular code around online child sexual exploitation. In the event that financial institutions were providing a SAR on this specific issue, that it would be identified with a particular marker that we would easily be able to track. And that notice actually was incredibly effective. We received over 1,600 suspicious activity reports from the period of September 2021 through December of 2021. And this year through April, I believe mid-April, we've received about 650 suspicious activity reports on this issue as well. So again, we're attuned to this issue. We're very focused on it. And
Can I
we're
ask
doing
a
what we
quick
can.
question? Do you think the one staffer is enough? And that may be that you don't have budget, I get that. But do you think the one staffer has the bandwidth to effectively monitor all of the SARs related to child sexual exploitation?
Again, this is a difficult issue. We should be providing resources across our entire envelope. Again, we are meeting incredibly difficult resource constraints against all of the types of activities that we do.
Okay. Just a general observation, and then I'll yield my time back. It gives me pause to know that there's only one staffer. And I know that you guys are budget constrained. But it's an enormous issue, and there's nobody more vulnerable than a child who's being sexually abused, whether it's online, in a home, whatever it is. We know from our office's work with the FBI, local FBI in Cleveland, that the pandemic had a particularly nasty effect on the increases in child sexual exploitation. So my ask would be that your office is willing to work with us on ways to get you, whether it's more funding, more tools, more resources, whatever it is, but this needs to be a bigger focus than just one staffer. And with that, I yield back.
And we would like to dedicate more resources, and we will take you up on that offer to work with you.
The gentleman's time has expired. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Acting Director, for being with us today. I want to talk about implementation of the Corporate Transparency Act, which is a pretty deceptive name, in my opinion, for a bill, as its scope goes far beyond large corporations. Before I came to Congress, I've started a number of small businesses. It was hard work, and honestly, probably the hardest work was dealing with the onerous government regulations at the federal, the state, and the local level. Way too much of my time was spent trying to please bureaucrats rather than trying to please my customers. I don't think it should be that way. And so as a part of my concern with the CTA was the additional compliance burden it places on businesses. The large corporations will be fine. They have armies of lawyers, accountants, compliance departments. They can handle everything, but for small business owners, it's a big headache. I was my compliance department. And by the way, I'd venture to guess that out of the tens of millions of covered entities of this law, the vast majority have no idea what FinCEN even is. So there's a big education piece to this and a somewhat large potential for bad actors to take advantage of the beneficial ownership requirements to scam these folks and steal their identities. Do you share these concerns? Are you striving to implement these new rules in the least intrusive way possible on small businesses?
That's what the AML Act and the CTA directs us to do, is to do it in a way that minimizes burden on small businesses. Again, we're focused on developing a database that is effective, that minimizes the burdens on small business while ensuring that we have a database that is effective and provides highly useful information to law enforcement. That's our prime directive with respect to the database. In terms of the reliability of the database, I think, again, we're very focused on ensuring the integrity of the database and ensuring that it meets the highest standards of IT protection, from hacks and otherwise. Again, we're very focused on privacy interests and considerations around those issues in the context of the CTA. And, again, the notice and comment process has provided us with a significant amount of feedback and useful feedback in terms of thinking through how the rules work, how they could be improved, and we'll be working on that in the coming months.
How do you feel like it's going so far?
Again, we're working incredibly hard on this effort. Again, it's difficult in a resource-constrained environment, but we're making a lot of progress. The team's incredibly dedicated. They're tired, I can tell you that. But we are making progress both in terms of the reporting rule, the access rule, and the overall database work. Again, it's an incredibly complicated effort. We've got to get it done right. And so we're spending time and effort to making sure that the rules work together, the database is built appropriately, and it's one that can be used effectively by law enforcement and other stakeholders. And then I think your point that it's incredibly important for companies and individuals that have to report information, that they understand what the rules are. And it's very important for us, and we're very focused on it from a FinCEN perspective, to develop a outreach strategy and an effort to engage with stakeholders, with industry groups, with businesses, and with state secretaries of state so that they understand what the contours of the rules are and they understand what the obligations are in a way that ensures that they can do so in the least burdensome manner as well.
Sure, thank you. This is going to be a huge amount of valuable, highly sensitive data. What's your cybersecurity plan to make sure that it stays where it's supposed to be?
So again, we're very focused on cybersecurity. We plan on applying high standards, the highest standards with respect to cybersecurity for the beneficial ownership database. With respect to our existing system of records, our database, we apply FISMA high standards with respect to the database. We do regular penetration testing. We engage closely with the Government Security Accountability Committee, which governs security around IT databases as well. And so, again, we plan on doing this with respect to the beneficial ownership database because we recognize that that database holds very sensitive information.
Thank you. The government's had a lot of breaches recently, and I'd hate to have this be yet another one. So I appreciate you prioritizing that. Thank you, Mr. Chairman. I yield back.
Gentleman yields back. The gentleman from Wisconsin, Mr. Stile, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you for being here, Director. Really appreciate it. I want to dive in. It's been discussed a little bit, but I want to dive in a little further on BSA data, SARs, the volume, who's looking at it, and the effectiveness of this. And so BSA data is meant to be highly useful for law enforcement. To what extent is law enforcement providing feedback to those who file BSA data? I'm looking for that feedback loop.
So we regularly engage with law enforcement in terms of the suspicious activity reports. We have a number of liaisons from law enforcement that sit within FinCEN and that we work with closely in terms of the use of SARs, priorities that law enforcement has, as well as feedback that we get. When we work with law enforcement and provide them with reports, we often communicate with them on the value of the suspicious activity reports that we have or other information that we give to law enforcement, and we across the board get positive feedback from law enforcement.
So let me, and that's good. Let me just scale this because I think it's important a little bit, right? And so in March of this year, 325,378 SARs were filed by financial institutions. What percentage of those might receive feedback in a given month?
So again, we do not collect SAR by SAR feedback. There are a number of challenges in doing so, right?
Understood. Rough math just to scale it, because I think it's relevant on this feedback loop, because I'll tell you on my side, many people feel that that the SARS information is just going into a black hole. So my concern is that people are filing what I call defensive SARs. They're filing SARs to be protective of themselves so they don't have an investigation coming upon them, rather than doing what we're really trying to do, right, which is to identify suspicious activity, which is actually helpful in your operations. And so, not that you aren't providing feedback to some, and in particular cases where that information is useful, but I think many people feel that there is a giant black hole. And my concern is when that perception can become reality for many of these banks who then engage in filing what I view as defensive SARs, which doesn't really help us. Finding the needle in a haystack is dependent on a handful of things, one of them being how big the haystack is. And so if we can find a way to bring this haystack down, I think we may actually find ourselves in a position to more easily find the needle, if you will. And I think that's one of the things that this committee should spend time on, in particular on the regulatory side and on the legal side of how we set the thresholds to file these SARs. I think it would be quite beneficial to remove some of the noise that's in these documentations. Let me shift gears because we've hit that a couple times today. One of the things I just want to touch base with you on is there's been a lot of concern. Some of my colleagues, some of the media, talking about the use of digital assets to avoid U.S. sanctions. I think some of it's misfounded based on and misplaced, especially given some of the level of visibility we have in open ledgers maintained on blockchain. A counselor to Deputy Treasury Secretary recently commented that crypto wasn't a major concern, given the huge scale of what bad actors would have to move. Do you agree that digital assets aren't a major sanctions evasion mechanism?
So again, in our sanctions evasion alert, we've alerted financial institutions to the potential for cryptocurrency being used as a channel for sanctions evasion. We've not seen significant activity, large-scale activity, in terms of the use of cryptocurrency for sanctions evasion. But again, there is potential for cryptocurrency to be used for sanctions evasion, and we are ensuring that financial institutions are alert to this issue, and if there is such type of sanctions evasion, to submit a suspicious activity report highlighting it.
I appreciate your feedback on this. On the very limited time we have left, one of the things I've been very concerned about is fentanyl coming into our communities. Number one cause of death, individuals 18 to 45. You are not involved in securing our borders, so I'm going to park that for a moment. But am curious as to what FinCEN is doing to stop illicit fentanyl traffickers from laundering their profits through our financial system.
So again, we receive suspicious activity reports with respect to drug trafficking, narco trafficking, fentanyl as well. We work very closely with law enforcement in terms of our efforts to help them understand money laundering organizations that are related to drug trafficking organizations. We work closely with HSI, with the FBI, and with DEA, and we have a close partnership with them in terms of helping them understand the information that we have and helping them analyze the information that we have to be able to better target this issue.
Thank you very much. Thank you for being here. Mr. Chairman, I yield back.
Gentleman's time has expired. I'd like to thank our Acting Director Das for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the Acting Director to the Chair, which will be forwarded to him for his response. I ask our witness to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the Chair for inclusion in the record. The hearing is now adjourned.
Thank you.